All right, Markets desk is going straight to the movers board. Tape is split. QQQ green, almost 8 tenths. SPY green. IWM red. Breadth mixed. So these runners are not just market beta. This is its own little pre-market casino. PPCB is the monster, up 268%, almost 100 times relative volume. VNRX up 85% with 193 million shares traded. MERC up 61%. And look at YAAS. Not the biggest percent move, but 237 times relative volume. That's insane. Quick risk corner 2. OMH is a 7 to 8 cent stock, down 19%. Anything under 10 cents can get delisted at any time, and it's not something I'd recommend for day trading. All right, charts now. All right, let's pull up PCCB, because this is the headline small cap rocket on the board. Oof, look at this candle. This thing was basically dead flat early. Tight little box from about 107 to 119, and then boom, straight parabolic. Current read around 393, high near 438, and the move is backed by monster volume. That matters. Markets mixed. QQQ green, IWM a little red. And this tiny biotech is up roughly 268% with about 100 times relative volume. That's not normal tape. That's event tape. The key now, after the spike, it's chopping 370 to 405-ish. Watch 438 above for the high of move test, and watch 370 below, because if that cracks, that post-spike battle starts looking a lot less clean. Now here's the catalyst side. The fresh release this morning says ProPant has new preclinical pancreatic cancer data for PRP, claiming more than 90% tumor growth inhibition and more than a 2.5-fold survival benefit. Big headline. And that's exactly the kind of wording that can light up a low-float biotech pre-market. But keyword, preclinical. This is not a commercial approval, not a revenue print, not a clean fundamentals re-rate. It's a biotech data headline hitting a very small share structure, and the tape is reacting like a squeeze machine. And this is where the markets desk has to keep score honestly. The float is around 1.25 million shares. So yeah, it can move violently, but the dilution screen is loud. Overall dilution risk is marked high. There's an active equity line, a pending S1, about 16 million raised over the last 12 months, and runway showing roughly 1.3 months. So the chart is hot, no question. Volume confirmed it. But this is also the type of name where overhead supply and offering risk can matter fast. For me, the read is simple. 4.38 is the upside trigger to prove buyers still have control. Below 3.70, the parabolic move starts losing structure. All right, let's reset from the penny chaos and pull up Apple. This is the grown-up part of the tape now. QQQ is up 8 tenths. SPY is green. IWM is slightly red, mixed breadth, but tech is carrying. And Apple, down about 9 tenths. So right away, relative lag. On the daily, this isn't a disaster chart, but it's not leading. Last 90 days, it ran from that 270 area into the 310s, and now it's boxed up. The base is basically 308 to 315. That 310 line matters. Above it, fine. It's digesting. Lose it cleanly, and oof. Now Apple starts acting like dead weight versus the Qs. Top of the box is 315.5. Quick catalyst check here, because Apple's not on today's earnings list, but there is recent company tape. They just pushed the M6 and M5 Ultra story, 2nm chip, AI compute angle, all the stuff the market wants to hear when it's in mega cap tech mode. And the last quarterly release was strong. Revenue at $109.4 billion, up 16%. Gross margin 50.1%. EPS 2.02, up 29%. So the backdrop is not broken. But here's the thing. At a 4.5 trillion market cap and around 41 times earnings, the stock has to earn every uptick. If the QQQ is ripping and Apple is red, the markets desk cares about that. Now let's drop down to the 1 minute. And yeah, look at this. This is tight. Not exciting yet. The range is basically 309.93 on the low to 310.65 on the high. 70 cents on Apple, pre-market, just chopping around the open area. You've got little dip volume pings near 310, 5,000, 9,000 shares, then one bigger bar around 310.45 to 310.58. About 14,000 shares, but no follow-through. That's the key. Volume showed up, price didn't travel. So this is balanced supply and demand, not a squeeze tape. First micro level is 310.60. If it can't clear that, sellers are still leaning. Under 310, that lower edge starts getting tested again. So, scoreboard for Apple here at the markets desk. 310 is the hold or slip line. 310.60 is the first tiny intraday lid. And 315.50 is the real daily ceiling. I'm not calling a trade there. I'm just marking the tape. If Apple stays heavy while QQQ stays bid, that's relative weakness. If it pops 310.60 with actual volume, okay, first sign the bid woke up. But the bigger win is not until it starts chewing into that 315 area. Coming up, we'll flip back to the movers board and see if the small cap names are still holding those early levels. All right, back to the movers board. Small cap tape is still doing the heavy lifting, while the indexes are mixed. Q2Q's green, IWM's a little red, so that tells you the broad risk appetite isn't just one clean wave. Here at the markets desk, I'm not chasing the same front three forever. We already put the big early runners on a scorecard. Now I want the second wave. Look at WNW sitting up 33%, YAAS still up around 30% with monster relative volume, and then flip side, AIXI, CRE, SOAR getting hit. That's the board. Gainers are loud, losers are ugly, and pre-market liquidity is thin, so the 1-minute chart is everything. Let's start with WNW, because this one's got the clean small float momentum profile, but it's also the kind of name that can rug pull fast. Meiwu Technology, consumer cyclical, China retail angle, stocks around 331, up about 33%, volume over 7 million shares versus an average around 80,000. Oof, that's why it's on the board, 91 times relative volume. Float listed around 1.2 million, so every bid and offer matters here. The line I care about first is 330. If WNW can keep accepting above that area, buyers are still defending the move. If it starts leaking under $3, that's where the structure gets a lot less interesting, and you can get those fast pre-market flush candles. Also, high dilution risk is tagged here, so don't treat this like some clean large cap breakout. It's a tactical chart, not a victory lap.
Thanks, Markets Desk. All right, top of the hour. Quick market minute for everybody just jumping in. It's 9:01 a.m. Eastern, Thursday, August 27th. And the tape is doing that classic pre-market split screen thing. SPY's at 768.02, up 0.25%. QQQ's the leader at 716.84, up 0.77%. But IWM's at 298.53, down 0.13%. So this is not broad happy clappy risk on. It's NASDAQ first, mega cap tech first, with small caps still standing outside the club, checking the dress code. VIX at 18.49, down 0.27%. Says volatility is not panicking here. Breadth is mixed, which matches the mood. AI and large cap software headlines are carrying the narrative, while the movers board is still its own little casino. Cross asset. The setup is pretty clean. Duration is a little heavy. TLT's at 83.20, down 0.12%, and IEF's at 93.29, down 0.03%. So bonds are not handing equities a big rates tailwind. The dollar's basically flat firm at 28.03, up 0.04%, while the yen proxy is softer at 57.50, down 0.09%. Even if you only trade U.S. stocks, keep one eye on that FX corner. Gold is off 0.25% at 420.26. Oil is up 0.81% at 128.38. And crypto beta is green. BITO up 1.13%, coin up 1.30%, MSTR up 1.98%. So the story is, not hiding in bunkers, but energy is still the inflation roommate eating snacks on the couch. Calendar-wise, Jackson Hole is running in the background. Another slot hits at noon, and the 12:30 batch brings goods trade, jobless claims averages, continuing claims, and inventories. Here at the macro desk, I'm watching Q2Q reclaiming that 717 neighborhood. VIX if it wakes back up over 18.50. Oil staying above 128, and TLT losing 83.20. Coming up on the rundown, Mega Cap Watch, another market mover scan, then news intermission.
Thanks, Macro Desk. Let's get NVDA up because this is the mega cap tape setter right now. QQQ's green, up about 8/10. SPY's green, breadth is mixed, and NVDA's quote is sitting around 222, up almost 5.9%. That's leadership. But look at the daily first. This is not some clean straight line moon chart. It's a wide, messy base. The big ceiling on this read is 225. That area has mattered. Above that, the chart starts asking if the earnings gap has real acceptance. Below it, it's still just battling the top of the box.
All right, breaking macro first. The dollar is catching a bid again as the whole street turns toward Jackson Hole. ProTerminal's newsroom is tracking the US dollar recouping some of last week's losses, with markets now focused on upcoming Fed official remarks at the symposium. What we know? The dollar has bounced. The calendar focus is Jackson Hole, and the next big macro marker we've got today is that noon Eastern symposium window. What we do not know yet is the actual tone, whether the remarks lean harder on inflation, growth, or just do the classic central bank fog machine routine. Market read is pretty clean. The dollar proxy is at 28.03, up 0.04%. Gold is lower at 420.26, down 0.25%, and TLT is a touch lower at 83.20. Meanwhile, SPY is 768.33, up 0.29%. QQQ is stronger, up 0.84%, but IWM is red. So yeah, here at the macro desk, big cap tech is still wearing the crown. Small caps are not exactly invited to the banquet. And every tiny Fed adjective is about to get treated like an earnings beat. Ridiculous, but that's the sport. Next headline. NVIDIA options are pricing a potential $280 billion valuation swing after earnings. That's the number on the board, $280 billion. And when NVIDIA is the name, that's not just a single stock event. That's an index weather system. Why it matters? QQQ is already at 717.37, up 0.84%, outperforming SPY, and NVIDIA sits right in the middle of the AI semis cloud capex trade that keeps dragging the tape around by the collar. We don't have an options chain here, so I'm not getting into strikes or strategy. The point is the market is bracing for a very wide move. When implied volatility gets that loud, the ripple can hit semis, mega cap tech, AI infrastructure names, and honestly half the stocks that put AI in a slide deck and called it a business model. And then the global rates piece. Investors now see the next Bank of England rate hike drifting into 2027. What happened is pretty straightforward. Markets are reading recent guidance as a longer pause in UK rate increases. Why that matters for investors is currency and bond math. Sterling, gilts, and cross-border rate differentials all move when the expected path shifts. It also feeds back into the dollar story because the dollar doesn't trade in a vacuum. It trades against everyone else's policy stance. If overseas hikes keep getting pushed further out while traders wait on Fed language, that relative rate backdrop can keep FX choppy. Coming up, we'll flip back to the movers board and see which single names are actually reacting, while macro does the heavy breathing in the background.
All right, let's hit the movers board, because the single name tape is way hotter than the index tape right now. Screen up. QQQ's still firm, Russell's red, VIX is sleepy, so this is not some clean everything ripping tape. This is stock picking. Microcap chaos. PPCB's still sitting at the top. And yeah, give the markets desk one there. That $4 line from earlier got tagged. Nice hit. VNRX and Merck are still hanging near the top too, but we already worked those battles. What I care about now is who's building a second leg and who's just doing the pre-market rug pull thing. WNW and YIAS are the momentum checks. AIXI and CRE are the downside checks. Oof, look at this board. Huge relative volume on the green side, but mixed breadth underneath, so don't treat every pop the same. Let's pull WNW first. This one still has that low float squeeze look, but it's thin, so don't fall in love with the candle. WNW is around 328, up 32%, about 7.4 million shares traded, on a float a little under 1.2 million. That's already multiple turns of the float. Relative volume is 92 times, so yeah, the tape is awake. but high dilution risk, tiny cap, China microcap structure. This can whip 10-15 cents like nothing. The earlier danger line was $3. It hasn't cracked that yet. Right here I'm watching 320. If 320 starts failing, the structure gets sloppy fast. If it can reclaim and actually hold above 335, then you've got the first sign buyers are pressing again, instead of just bouncing it. Level to level, no hero stuff. PPCB now. And yeah, this is the one that already tagged that $4 spot. So now the question is super simple. Was that a real acceptance move? Or was that just the extension candle everyone chases late? Board has it around 380, still up 250+%. 26 million shares, relative volume over 100 times normal. That is insane activity for a float around 1.25 million. But here's the catch. Dilution risk is still high, so on a biotech microcap like this, I'm not treating the headline move like it's clean. $4 is the line now. If it can reclaim and hold above 4, momentum's still alive. If it keeps failing under that, and the candle starts stair-stepping lower, that's where the squeeze starts turning into a trap. Now, VNRX. Totally different look, because this is sub-$1 liquidity. But the tape is gigantic. About 195 million shares traded, up almost 88%, and relative volume around 90 times normal. The level from earlier is still 60 cents. That was the breakout zone, so I care way less about the exact penny-to-penny wiggle, and way more about whether buyers keep defending that area. Above 60, it's still acting like a momentum name that's digesting. Lose 60 and sit under it, especially with those big red 1-minute candles. And that's when you start thinking exhaustion instead of continuation. Also high dilution risk here too. So same deal. Fun chart to watch, but you cannot get married to these moves. Merck next, and this is a different flavor from the tiny float squeezers. This is penny liquidity. Yeah, but it's not a 1 million share float type of thing. Mercer's trading around 67 cents, up about 64%, with roughly 46 million shares done. And that's still huge volume versus normal, about 71 times relative volume. So the read here is less, can it halt through the roof, and more, can it actually build above that 66-cent pocket without turning into chop? If buyers keep defending the mid-60s, and it keeps pressing back toward the highs, okay, that's follow-through. But if it starts chewing through 66, reclaiming, failing, reclaiming again, that's where this becomes a liquidity blender. I'd keep that 66 area on the screen, because for Merck, that's the difference between clean momentum and just a penny stock churn zone. Yas now. This one's still interesting because the relative volume is just stupid. Over 240 times normal, about 24 million shares traded, and the float's only a little over 2 million. So yeah, this can move, but it can also rug pull fast. We already had those two spots open, 320 and 330. To me, 320 is the must-hold line for the current momentum pocket. If it's living above that, buyers are still at least in control of the conversation. 330 is the cleaner acceptance level. Get above it, stay above it, and you've got a much better looking tape. But if it pops over 330 and immediately snaps back under 320, that's the trap setup. That's the one where the breakout buyers get stranded. And with this kind of float, those candles can go from clean to nasty really quickly. All right, quick downside and second wave pass before we rotate. AIXI first. This is the red one on the board, down about 29%. And the line is right here around 57 cents. If that 57-cent area gives way, that's where this can turn from ugly into actual liquidity air pocket stuff, because the float is tiny and the dilution risk is high. Now CRE, different tape, not the same crazy volume, only a little over 1 times relative volume, so I'm checking whether this is real selling or just a thin fade. It's sitting near 518, so $5 is the big round number zone. If it loses 5 cleanly, that's the spot where downside scanners may keep leaning on it. Now for the second wave names. NCPL has the better liquidity, 61 million shares traded, but it's still a 60-cent high-risk capital markets name, so I care more about whether 60 cents holds than the headline percent move. YMT is cleaner but thinner, right around $4, only about 150,000 shares, so that $4 line matters, but the volume quality is not in the same league as PPCB or VNRX. And MIMI up about 21%, 4.6 million shares, but only 1.4 times relative volume. Decent pop, not the monster tape. So leaderboard for me is still PPCB and VNRX for raw heat, YAAS for wild relative volume, NCPL for liquidity, and the rest need confirmation. Coming up, let's flip into the next board and news rotation and see what actually has a catalyst behind these candles. Alright, let's hit the movers board again. Quick, clean, and only what's still moving right now. QQQ's green, Russell's a little red. Breadth is mixed, so this isn't some everything rips tape. This is stock-specific heat. PPCB still sitting on top, up about 225%. We already rang the bell on that earlier $4 hit, so I'm not going to recycle the whole story. Under it, VNRX still up 96%, Merck up 62%, WNW holding a 30% move, then YAS and YMT still hanging around the mid-20s. And don't ignore the red side. AIXI is still down 28, CRE down 24. Oof. Then OKTA, totally different animal, 20% green, bigger cap software name, but relative volume is still showing pre-market type behavior, so don't overread that board print yet. First chart up, PPCB, 1 minute, and yeah, this is exactly why the market's desk keeps score. That $4 level we flagged earlier did get tagged, but now the thing's back around 347 on the board, so the hit happened and then the fade showed up. That matters. We've got 29 million shares through it, 135 times relative volume, tiny biotech float behavior, big candle risk. I'm not redoing the whole cancer data headline here. The chart is the story now. For me, 350 is the quick reclaim line. If buyers can't get it back over 350 and hold it, it's just chop under resistance. If it loses 325, that's where this starts looking less like a tight pullback and more like trapped momentum. Oof, watch those wicks. These microcap candles don't negotiate. Thanks, Markets Desk. Quick stock whisperer check on the paper book. This is the show's simulated paper trading portfolio, not something to copy, and the new position is HSBC, short 60 shares, entry 103.34, trading basically flat against us right now at 103.40, down $3.60. The thesis is simple: disappointing results, surprise $400 million charge, and in a mixed tape I'm looking for a downside reaction to actually confirm. The level I want to see crack is 102. If it can't get below that, then this is just noise around the entry, not follow through yet. Flip to orders for the risk. HSBC is bracketed. Buy to cover take profit sitting at 98.60, stop at 106.20. So here at the Stock Whisperer, the trade is not a vibe. It's thesis, level, defined risk. Rest of the book. BABA short is working nicely. Entry 120.88, now 117.91, up 237.60. NVDA long is still green. Entry 221.93, now 223.68, up 61 bucks. XOM short is also working. Entry 160.33, now 157.50, up 169.50. Total open P&L is roughly plus 465, but HSBC is the one I'm grading from here. Either 102 confirms, or that 106.20 stop tells me the idea was early or wrong.
Thanks, Stock Whisperer. All right, quick news brief from the macro desk, and we're starting with the big one. Tech led U.S. stocks lower as NVIDIA earnings and Jackson Hole loomed. The setup here is simple. Traders were de-risking around two things that can reprice the whole growth stock complex: AI earnings expectations and Fed messaging. Now live tape has QQQ around 718, up about 9/10. So the market is trying to stabilize this morning. But the reason it matters is still the same. When tech carries the index, every Fed word and every AI margin comment suddenly gets treated like it came down from a mountain carved in stone. Very normal market behavior, totally not dramatic at all. Next headline: NVIDIA's CEO rips the Band-Aid off as the AI chip giant resets expectations. ProTerminal's newsroom is tracking the shift in tone here. Not that AI is dead, not even close, but that the market may have to move from unlimited hype math to actual capacity, revenue timing, and customer spend math. That matters for NVDA first, obviously, but also for the whole AI chain. Semis, hyperscalers, software names leaning on AI multiples. With NVDA already the emotional thermostat for this tape, even a more realistic tone can change how investors price the group. Third one. Investors tied to the Tetra Pak family cut U.S. stock exposure in a portfolio worth about $17 billion. That's not a day trader headline. That's big capital allocation. The key is not to pretend we know every motive. Taxes, estate planning, valuation, currency, all can matter. But when long-term money lightens U.S. equities, it feeds the broader question. Are valuations asking too much, while rates are still not exactly throwing a welcome party? Next up, Apple leadership. Tim Cook's run is being framed around a 2,150% shareholder return over 15 years, with John Ternus positioned as the next potential leader. For investors, this is less about one headline and more about continuity. Apple is a machine, but even machines need someone deciding what gets built next. iPhone cycles, services, wearables, AI features, all of it. AAPL around these leadership transition stories tends to trade on confidence that the product roadmap stays boring in the good way. Boring, at Apple scale, can be a feature. Last one for the brief. Agrico, the UK power equipment rental firm, has filed for a US IPO. No listed ticker yet, so this is not a chart story, it's an appetite story. Infrastructure, temporary power, energy resilience, grid stress, data centers, disaster recovery, that whole bucket has become investable again because the world keeps discovering electricity is not optional. The why it matters piece. If this deal gets real demand, it tells us institutions still want cash flow infrastructure exposure, even with the broader market debating rates and tech multiples. IPOs can be thin and jumpy, so no heroics implied there. Coming up, we'll hand it back toward the market mover scan and see where the actual pre-market heat is now.
Thanks, Macro Desk. All right, Markets Desk is back on the movers board. QQQ still leading, SPY is green, IWM is actually red, so this is not some clean small cap party. This is selective heat. Top row, PPCB up 236%, 31.8 million shares, 147 times relative volume. That is insane flow for a tiny biotech. Then VNRX up almost 89%, with 200 million shares traded. Oof. MERC is right behind it, up basically 60%, and then OKTG, that leveraged OAK to ETF, is up 43% on much lighter volume. So the job here is simple. Don't worship the percent column. We're grading liquidity, spread, and whether the 1-minute chart is still accepting higher prices, we're just handing bags to late buyers. First chart, PPCB. And yeah, this thing is still the loudest name on the board. Price is sitting around 360, up 236%, but the real stat is the float, about 1.25 million shares, against more than 31 million traded already. That's why these candles can go vertical, and that's also why they can rug fast. High dilution risk on the profile too, so I'm treating this like a pure tape read, not a fundamental story. What I want on the 1 minute is clean bid support after pullbacks. If every dip gets absorbed and the next candle pushes back toward the prior pop, momentum's still alive. If the wicks start getting ugly and buyers stop defending the pullback, that's where these little biotech rockets can turn into trapdoors. Fast name, great for learning tape, not one you fall in love with.
Thanks, Markets Desk. All right, Macro Desk taking the wide-angle lens into the open. We're about 8 minutes from the bell, and the story is pretty clean. Growth is getting the benefit of the doubt, but the whole market is not exactly holding hands and singing. SPY's up about 3/10 at 768.34. QQQ is the clear leader, up 0.86%, around 717.47, and IWM is still a little red at 298.51, down 0.14%. So that's the split right there. Megacap tech has the keys. Small caps are still in the cheap seats. VIX at 18.47, down a touch, tells you fear is not screaming into the open, but it's not sleepy either. And with Brent mixed, this is not a broad everything rips open. This is more selective. NVDA is basically the mood ring for the AI trade again. MSFT and AAPL matter for index weight. OKTA is in play off the software tape, and then you've got the small cap casino names, PPCB, VNRX, that can do their own weather system once the bell hits. Breaking from the Pro Terminal news desk, stocks rally as yields and oil prices fall. That's the headline hitting the tape right now. What we know? Equities are catching a bid, tech is leading it, and the market is leaning into the classic macro combo. Lower financing pressure, lower energy pressure, better mood music for margins. What we don't know yet, whether this is durable risk on or just a relief bounce before Jackson Hole and the 1230 data stack. Here at the macro desk, I'd call it constructive, not carefree. SPY's around 768, up 0.28%. QQQ is doing the heavy lifting at 717, up 0.84%. But IWM is still red and breadth is mixed. Also, the live cross-asset board is not exactly singing four-part harmony. TLT is 83.15 after tagging that 83.20 downside level earlier. And USO is 128.33. So yeah, good equity tape, but confirmation is still a little messy. Macro brought the kazoo, naturally. Next headline. NVIDIA tops Q2 expectations with $96.2 billion in revenue. That's the fact pattern. A big Q2 beat, a strong Q3 outlook, and AI chip demand still carrying the story. Why it matters is pretty simple. NVIDIA is not just one stock at this point. It's a weather system for semis, AI CapEx, and the NASDAQ tape. With QQQ around 717 and leading the indexes this morning, this is the kind of report that gives the growth side of the market permission to breathe. Still, big numbers don't remove volatility. They just move the argument to valuation, margins, supply, and how much good news was already in the price. And one more major company headline. Meta agrees to settle social media case for $16.68 billion. What happened? Meta reached a large settlement tied to child harm claims and committed to platform changes. Why investors care? This is a real dollar reminder that mega-cap tech has two ledgers now. Growth on one side, regulatory and compliance cost on the other. In a tech-led rally, that matters because not every big platform gets the same multiple when legal risk is sitting on the desk like a cold cup of coffee. Coming up, we'll flip back to the movers board and see whether this broader risk bid is actually showing up in the smaller names.
Thanks, Macro Desk. Let's pull up YJ real quick, because this little China retail name is actually showing tape. Market's mixed. QQQ green, IWM red, and YJ's up about 15.5%. Small cap, roughly 15.7 million market cap. So yeah, when this thing lights up, levels matter fast. Okay, here's the chart. This is the part the market's desk cares about. YJ starts around 290, pushes through $3 early, and look at that first volume punch. Bars coming in above 10,000, then later 15 to 22,000 on the breakout. For a name with average volume listed around 5,300 shares, those 1-minute bars are not normal. That's the whole story right there. Volume actually confirmed the move. The breakout leg is clean from basically $3 up to $3.23. That's the high so far. Oof, look at that wick off $3.23 though. Buyers got paid, then it backed off into the $3.10 area, now sitting around $3.08 in the read we've got. So I'm not treating this like straight line momentum anymore. I'm treating it like a breakout that is now testing whether it can build a higher base. 2 levels. $3 is the line underneath. If that cracks, the breakout loses its clean look. $3.23 is the lid. If it gets back above that with volume, that's when the tape tells you buyers are pressing again. Not a recommendation. Now catalyst check. We've got the news tab up, and the freshest press release here is August 20th. Yunji announced first half 2026 unaudited financial results. Before that, August 13th was the heads up that the report was coming. So this doesn't look like a brand new headline from this morning in the data we've got. It looks more like the market is still repricing a thin small cap story after recent results, with volumes suddenly showing up. Business-wise, Yunji is a social e-commerce platform out of Hangzhou. Beauty, household products, groceries, electronics, apparel, all that consumer basket stuff. Consumer cyclical, specialty retail. But for a small cap tape read, I care less about the brochure and more about whether buyers defend $3 after that breakout. One more thing, and this matters with names this size: dilution. On the dilution page, YJ shows medium overall risk, no active shelf, but it does show an active equity line. Amount raised over the last 12 months is listed at 0, runway around 22.8 months, shares outstanding around 4.9 million. So it's not screaming emergency raise from this snapshot, but the overhead supply score is elevated, and there have been 6 offerings historically. That's why you don't get married to tiny caps just because the 1-minute chart looks spicy. So my map is simple. Above 323 with real volume, the breakout is still alive. Below $3, it's a failed breakout look. In between, it's chop after the first burst. Coming up, we'll jump back to the movers board and see if this heat is spreading or if it's just a one-name squeeze. All right, let's hit the movers board. Markets desk speed run. Board first, then straight into the 1-minute charts. QQQ is still the strong side of the tape. SPY green, IWM slightly red, so small cap runners are not getting a perfect market tailwind here. That matters. PPCB still sitting at the top. Monster move, up about 226%, price right around 349. VNRX is still huge, but we already know that mid-60s area has been the battleground. Merck still hanging in the stack, but I'm not going to relitigate that whole fade versus continuation read. What I want now is fresh heat. WNW up 32% with almost 96 times relative volume. NCPL still active. OKTA is the real large cap name on this board. And then WKSP, oof, 258 times relative volume. That one's screaming liquidity. So we start with the leader. Then I want WNW and WKSP on deck. Okay, PPCB first. Pull it up. This is the chart where you have to separate squeeze from trap, because the numbers are wild. 349, up 226%, 33.6 million shares already, and roughly 156 times relative volume. Tiny healthcare name, high dilution risk on the board. So yeah, this can move fast both ways. That 350 area we flagged earlier got tagged, so now it's not some random line, it's the scoreboard line. If buyers can reclaim and actually hold above 350 on the 1-minute, that says the chase is still alive. If it keeps rejecting right under there, then this becomes a lower high tape real quick. I'm also marking $3 as the danger zone underneath. Not a prediction, just the line where a parabolic small cap stops looking controlled and starts looking like an air pocket. No hero ball on these.
Thanks. Markets desk. Bell's live. Here's the macro open. Dow line isn't on this portal card right now, so I'm not going to cosplay a quote. Broad tape is SPY at 768.3, up 0.29%. QQQ at 716.8, up 0.76%. And Russell via IWM at 299, basically flat, up 0.02%. So yeah, green open, but it's not a parade. It's more like one lead car and a couple scooters behind it. VIX is 1850, down a touch. And breadth is mixed, so the tape is positive, but not chest thumping. First movers out of the gate. PPCB up about 229%, VNRX up 90%, Merck up 52%, NCPL up 41%. Those are liquidity bonfires on the edge of the tape. Macro message: growth has the early bid, but the average stock hasn't fully signed the guest book yet. For me, SPY 768 is the keep it clean line, and QQQ still needs that 718.46 area if tech wants to prove buyers are pressing, not just making noise at 931. Now, the reason I'm not doing cartwheels here at the macro desk is the bond and FX side. TLT is 83.19, down 0.13%. IEF is basically flat at 93.31, so duration is not exactly rolling out the red carpet for equities. TLT 83.15 is still the pressure line I care about. Below that, stocks have to work harder for every green tick. Dollar proxy is 28.03, up a hair. Yen proxy is 57.50, down 0.09%. Even if you only trade US stocks, keep the yen on a side monitor here. Soft yen, firm dollar, and heavy bonds can tighten the whole room in that sneaky, why is my momentum name suddenly heavy kind of way. Calendar-wise, Jackson Hole chatter is already in the bloodstream, and 12:30 Eastern brings goods trade balance, estimate minus 99, plus the claims and inventory block. That's the first real macro pothole after the open. So the chain is clean. NASDAQ bid, vol quiet, breadth mixed, bonds not fully confirming. Classic macro. Everyone likes the party until rates walk in holding a clipboard. Okay, cross-asset confirmation now. Gold's not really helping the risk-off story this morning. GLD proxy is around 420.53, down about 0.2, while oil's got a little bid, with USO around 128.33, up roughly 0.8. So energy's firmer, gold's a little soft, bonds are not exactly screaming safety. And then look at the speculative sleeve. BIDO up 1.2%, coin up 1.4%, MSTR up almost 2.5%. That's why the NASDAQ bid matters here. It's not just defensive money hiding. There is still some risk appetite under the surface. My board for the next hour is pretty simple. SPY around 768 is the line for broad tape tone. QQQ needs to keep respecting that 718 area. 718.46 was the high in the data. VIX around 19 tells us whether this stays orderly. And TLT around 83.15 is the macro tell if rates start pushing back again. Also, keep Jackson Hole on the radar. And we've got that 12:30 Eastern data point later. So don't fall asleep just because the open looks clean. Alright, macro map is set. Coming up next, quick pro terminal plug, and we'll show you exactly where all these movers, charts, filings, and dilution pages are coming from.
Thanks, Macro Desk. Quick tool check while the tape's hot. This board right here is ProTerminal's movers page. This is where the markets desk lives at the open. PPCB up huge. VNRX still active. MERC fading a bit. No guessing. Price, percent move, relative volume, right there. It's not a buy signal. It's the starting point. Now, the stuff that saves you from getting blindsided. Dilution. Oof, this page matters on small caps. Shelf registrations, ATMs, offerings, runway context. When a runner is doing wild volume, I want to know if there's paper overhead. Again, not telling you what to trade, just showing you the risk map before you start believing every green candle. Then you pull up an actual name and go straight into the documents. Here's YJ as the demo. Filings first. What did they actually file? When did it hit? What changed? Then insider trades. Who's buying? Who's selling? If anything is there. Then the news tab, because the chart tells you what traders are doing, but the headline tells you what they're reacting to. Fast workflow. No wasted clicks. And boom, back to the 1-minute chart. This is the loop. Mover hits the board, chart confirms the tape, filings and dilution check the landmines, news checks the catalyst. That's ProTerminal. If you want the same screens we're using live here, go to proterminal.io. Sign up at proterminal.io.
All right, back to the movers board. Let's see what's actually got juice right now. QQQ's green, SPY's barely green, IWM's basically flat, so these small cap moves are their own little universe. Top of the board is still PPCB, up about 236%, 45 million shares, 209 times relative volume. That's not normal trading. That's a full liquidity event. VNRX right under it, still almost doubling with 217 million shares traded. Oof. Then NMTC, Merck, OKTG, WNW. So we've got healthcare squeezes, one basic materials name, and a few levered ETF products mixed in. Markets desk rule here. Percentage gain is cute, but volume plus level is what pays the bills. PPCB first, because this is still the board captain. Pulling up the 1 minute, look at where it's sitting. 359-ish, basically hovering around that 350 reclaim zone we already had on the scoreboard. That's the whole fight. Above 350, the squeeze crowd can still argue it's alive. Lose 350 cleanly, and I don't care that it's up 200%. Momentum can cool fast. And remember the structure here? Roughly a 1.25 million share float, 45 million shares already traded, high dilution risk flag. That means it can move violently both ways. This is not a clean mega cap trend. This is supply, shorts, liquidity, and trap risk, all smashed into one candle chart. I'm watching 350 as the line now. If it starts accepting under that instead of just wicking, that's the first real yellow light for this run. VNRX is the next one, and this is the liquidity test of the morning. 217 million shares already. That is not normal traffic for a sub-dollar diagnostic name. Price is around 67 cents, up basically 97%. And the thing I care about now is that mid-60-cent shelf. If buyers keep absorbing there, okay, the tape is still alive. But if 65 starts slipping and the candles keep closing under it, that's where these can go from controlled momentum to everybody trying to find the same exit. Also, just like PPCB, high dilution risk on the board here, so I'm not treating this like a clean long-term story. This is a tape read, volume first, structure second. NMTC is a totally different kind of move. Yeah, it's up 58%, price is sitting around 316, but the volume profile is way lighter, about 500,000 shares, only 1.74, was pretty obvious though, $3. If 3 holds clean and it bases above it, that's constructive for the chart. If it gives up 3, then the whole move starts looking a little thin because you don't have that monster liquidity cushion underneath it. Nice move, just a way different personality. Merck now, and this one's interesting because it's not another tiny biotech headline chase. Basic materials name, pulp products, and it's still up 46% with 52 million shares traded against a normal day around 650,000. So yeah, the volume is real. But look at the price, low 60-cent area. This is where I want to see if that earlier relative strength look is starting to slip. If 60 cents starts acting like resistance instead of support, that changes the tone fast. Above about 65 cents, okay, buyers are still defending the move. Below 60, then it starts looking more like the crowd is rotating out of the lower priced runners. WNW next. This is the one I'd be way more careful with. It's up about 37%. Sitting around 339, but the big thing is the float. Roughly 1.2 million shares, and relative volume is over 100 times normal. That is exactly the kind of setup where the candles can look amazing for 2 minutes and then just rug. Recent filings are on the profile, dilution risk is marked high, so I'm not treating this like a clean operating company breakout. I'm treating it like a low float retail tape. Watch 340, because if it can't stay above that zone, the chase gets shaky. If it starts holding above 350 with volume, then at least the buyers are still there. But the risk on this one is not subtle. Okay, now this little pocket matters. OKTG, CRMG, CRWL. These are not operating company movers, right? This is the levered ETF lane. OKTG is the 2x long OKTA daily product, up about 37%. But the actual volume is only 42,000 shares. So don't read this like a normal stock breakout with a real float story behind it. Now flip CRMG. Same idea. 2x CRM daily exposure, and this one's doing a lot more tape. 2.3 million shares, up 30%. Relative volume about 6.5. That's the one in this pocket where the liquidity is actually showing up. And then CRWL tied to CrowdStrike, up 28%, but volume is basically around normal. Relative volume under 1. So the takeaway is simple. Separate the single stock ETF products from the actual companies. They can rip because the underlying mega cap is moving, but the product mechanics matter. The daily reset matters, and the liquidity is not the same across all three. Last contrast here. AMOD versus MIMI, because this tells you whether money is broadening out or just bouncing around the tiny float stuff. AMOD is the red one on the board, down about 29%, around 272, and the volume is actually below its average, relative volume 0.55. So that's not the same kind of panic volume washout as the top gainers. It's more like a thin tech name getting marked down while the market itself is still holding up. QQQ green, SPY slightly green, IWM flat. Now MIMI on the other side, small cap industrials, up 28% around 231, 5.7 million shares. Relative volume 1.7. float about 1.38 million. So yeah, it's green, but compared with PPCB or VNRX, it's not the same nuclear volume event. My read on the board? The real action is still concentrated in ultra-small healthcare and a couple of specialty names, while the levered ETF pocket is its own thing. Alright, that's the movers scan. Coming up, let's switch gears and hit the next live tape check.
Thanks, Markets Desk. Breaking right now, Nvidia is jumping 7% after blockbuster earnings and stronger revenue guidance. And that's the headline driving the tape. What we know, the market is treating the print as confirmation that AI demand is still very much alive, not some cute little one-quarter sugar high. QQQ is sitting around 717, up 0.8%. SPY around 768.5, up about a third. So yeah, this is showing up in the index complex. What we don't know yet is how much of this is durable follow-through versus the opening earnings squeeze, and whether every AI-adjacent name deserves to draft behind Nvidia. Here at the macro desk, the read is simple. When the AI bellwether is up 7% and VIX is still under 19, the market is willing to listen. It has not, however, agreed to marry the story over lunch. Next, Nvidia headline. The CEO is forecasting 70% fiscal 2028 revenue growth, far above expectations. That matters because this is not just a next quarter beat story. It pushes investors to reprice the length of the AI build-out. The big question becomes, is AI compute demand a cycle, or is it infrastructure, like railroads with better margins and fewer mustaches? Cross-asset check is interesting too. TLT is around 83.19 and still slightly red. The dollar is firm near 28.03. So the tech bid is not really coming from a big rate relief party this morning. It's coming from growth confidence. Cleaner in one sense, also heavier, because now the demand story has to carry the backpack. Third AI story on the wire. ProTerminal is tracking reports that Nvidia has agreed to buy Hugging Face for $12.9 billion. What we know from the headline: this would push Nvidia deeper into the AI software and model development ecosystem, not just the chip side. What we don't have yet from this card: deal structure, timing, regulatory path, closing conditions, all the boring but important furniture that decides whether a deal is clean or starts wobbling. Why it matters. If Nvidia is the toll road for AI compute, Hugging Face is closer to the map people use to decide where the traffic goes. That's strategically important, but the market still has to separate confirmed economics from headline excitement. Coming up, we'll hand it back toward the movers scan, because after macro explains the weather, somebody still has to dodge the puddles.
Thanks, macro desk. Let's put Google on the big screen. QQQ is up basically 1%, and Alphabet is red by about 0.5%. That matters. This is not leading the AI tape today. Daily chart first. We're sitting around 340, basing, but still under that prior 351.60 resistance shelf. Okay, daily structure. Oof, look at the shape here. Google had that push up toward the 385 to 400 zone, then the sellers took control. Lower highs, lower lows, and the ugly part is volume confirmed the big downside days. The low in this 90-bar window is 317.69, so that is the bigger picture support way underneath. But the current fight is much tighter. 340 to 345 is the base, 351.60 is the upside lid, and around 334 is that 200-day moving average area from the technical package. So here at the markets desk, the clean read is simple. Google is lagging a strong NASDAQ tape until it can reclaim 351.60 with actual volume. Below that, it's just a base trying not to crack. Now let's drop down to the 1 minute, because this is where the personality shows up. Google opened near 340.87, chopped sideways, then slipped, and the nasty candle is that break from around 340.28 down to 338.53. That wasn't a sleepy drift. Volume spiked into that low. Sellers showed up. But then, credit where it's due, buyers answered fast and pushed it right back toward 340.80. So now the scoreboard is very clean. 338.53 is the low that can't start leaking if this bounce is real. and 340.87 is the morning high the stock has to chew through to stop being dead weight versus QQQ. Right now, it's a bounce into resistance, not a confirmed trend change. Quick catalyst check on Alphabet. The fresh company headlines are more Google Cloud partnership type stories. Bench Sai running on Google Cloud, Conduent talking Gen AI e-discovery, fine for the broader cloud and AI narrative, but not a single stock shock like the NVIDIA earnings story the macro desk just flagged. There are also investor alert headlines floating around, so yeah, some noise. For me, chart still leads here. Above 340.87, buyers are trying to repair it intraday. Above 351.60 on the daily, then the tone actually starts to change. Coming up, we'll flip back into the mover scan and see where the real opening drive volume is hiding. Alright, Markets Desk is back on the movers board. Quick score check, then charts. Tape is still split. SPY green, QQQ stronger, IWM basically flat, VIX under 19. So when PPCB is still up 217%, VNRX up 82%, MERC up 49%, that's not broad market drift. That's hot money finding tiny names. PPCB still owns the top of the board, but it's not clean anymore. That 350 reclaim we were tracking earlier, quotes back around 340 now, so the scoreboard changed. VNRX is still absurdly liquid, almost 230 million shares. MERC is trying to hold the low 60-cent zone after that earlier hit. And don't sleep on WKSP down here, up 25%, but relative volume is 272x, with 68.6 million shares. That's heavy crowd action. First chart is PPCB. I want the 1 minute. Now, PPCB on the 1 minute, this is where the Markets Desk gets picky. It's still a monster headline move, up 217%, 51.8 million shares traded, 240 times normal volume. But look, the important part is not the percent gain anymore. It's whether buyers can keep paying above this 340 area after failing to stay clean over 350. Tiny float, roughly 1.25 million shares, and high dilution risk in the data. That combo can rip, but it can also rug pull fast when momentum thins out. So my line right here is simple. Watch 340. Above that, bulls at least have a base to argue with. Under it, this starts looking less like controlled continuation and more like churn after the squeeze. Not calling a trade, just keeping score. Next up, VNRX, because that thing's volume is ridiculous. VNRX, next on the 1 minute. And this one is wild because the liquidity is absolutely real, but the chart is not as clean as the headline move. You've got Volition RX around 62 cents, still up about 82%, and the volume is the story. Basically 230 million shares traded, 106 times normal volume. That is real participation. But here's the score. That mid 60 cent area matters. If this thing keeps failing around 65 cents, that's sellers meeting it right where momentum traders want the reclaim. So I'm not treating this like a clean breakout unless it can actually get back above 65 and hold it. Under 60 cents, you start thinking failed reclaim, crowded tape, and that's where these penny biotech moves can get slippery fast. Also, high dilution risk on the profile. So yeah, liquidity is huge, but the supply risk is part of the tape here. Merck is a different flavor, and that's important. This is not the same healthcare squeeze basket as PPCB and VNRX. Mercer's a basic materials name, pulp, paper, lumber exposure, sitting around 62 cents, up 49%, and the relative volume is still big at 84 times normal, so the scanner loves it, no doubt. But compared with the healthcare runners, the move is more of a grind back attempt after earlier weakness. I'm watching this low 60-cent zone right here. If Merck holds 60 cents in bases, okay, that's at least stabilization. If it loses 60, that 49% green headline can fade really quickly because it doesn't have the same 200 million share chaos that VNRX has. Medium dilution risk here, not high, but still a penny stock tape. I want the candles to prove demand, not just the percent gain column. NIMI now, and this is the quieter one, but don't ignore it just because the relative volume isn't insane. It's still up basically 49%, trading around 268, and the float is tiny at about 1.38 million shares. The difference is volume, 9.2 million traded, 2.75 times normal. That's active, sure, but it's not PPCB style, it's not VNRX style. where the whole tape is just flooded. So on this chart, I'm treating it more like a thin low-slope cop where the spread and the candles matter a lot. If it can keep accepting above that 270 area, all right, then buyers are still defending the move. If it starts losing 250, that's where I don't want to pretend it's clean momentum anymore. Then it can unwind fast because there's just not a ton of float cushioning the move. WKSP is the one that jumps off the sheet for liquidity. This thing's around 64 cents, up about 25%. But the stat that matters is 68.6 million shares and 272 times relative volume. So yeah, the liquidity is real. This is not a ghost print. But this is also a penny stock with high dilution risk on the board. So the way I read it is very different from a clean large cap breakout. Around 64 cents, I want to see whether it can build higher lows instead of just one big volume candle and a bleed.
60 cents is the obvious danger zone underneath. Lose that and the whole momentum look gets a lot shakier.
About 70 cents, that would be the reclaim area where traders probably start checking if there's another squeeze attempt. But again, with names like this, huge volume doesn't erase dilution risk. It just means there's a lot of two-way action to manage.
Thanks, Markets Desk. Quick paper book check from the Stock Whisperer. This is the simulated broadcast portfolio, not something to copy. And the new ad is NVDA, long 40 shares, entry 223.91, basically flat right now at 223.92. The thesis is clean. Eye-popping Q2, fresh AI partnership headlines, and QQQ still leading the tape. QQQ's up about 0.9%, so tech is confirming for now. My trigger from here is 225.50 above. That's where I want to see buyers reclaim the morning high zone. The failure line I'm watching is 221.50, and the actual paper bracket is defined. Stop at 219.80, take profit order up at 234.50. So yeah, thesis, level, defined risk. That's the whole reason this is in the book. On the rest of the simulated book, Baba Short is still the best worker. Short 80 from 120.88, now 117.91, up about $238, with the stop sitting near break even at 120.90 and the paper take profit at 115.50. XOM short is also working. Short 60 from 160.33, now 157.50, up about 170, bracketed with 155.50 below and 159.20 above. HSBC is basically noise. Short from 103.34, now 103.40, down $4, no damage, but no edge yet. And ZM is the one I have to grade honestly. Short from 96.36, now 97.33, down about 97. Stop is 99.25, so if it keeps squeezing, the paper book takes the loss and moves on. Coming up, we'll kick it back into the mover scan.
Thanks, Stock Whisperer. All right, Company Desk is staying in AI, but we're moving from the paper book to the actual business story behind this tape. Pull up NVDA first. QQQ is up about 0.7, breadth is mixed, and Nvidia still sitting up almost 6%, around 222 on the platform data. So this isn't just, hey, big stock green. The question here is, did last night's print actually widen the AI spending runway, or is the market just paying up for the same leader one more time? That's the story we're going to test across the chip stack. Now, let's go to the Nvidia news flow, because this is where the Company Desk cares about the why. The headline number from the release is huge. Fiscal Q2 revenue of $96.2 billion, up 18% quarter over quarter, up 106% year over year. Gross margin at 75%. Non-GAAP EPS at 2.22. That's not a little beat, that's a scale argument. And then right next to it, you've got the AWS and Nvidia release, talking about 2 million additional GPUs and next-generation infrastructure for agentic and physical AI. So the key fact is not just demand exists. The key fact is the hyperscalers are still committing real infrastructure behind it. That's what changes the read for the whole group. And I want to make one important distinction here. Nvidia, at a market cap north of $5 trillion, is not trading like a little momentum name where one press release can change the whole float. This is now a benchmark asset for AI CapEx. So when this stock moves 5-6%, it forces the market to reprice suppliers, customers, competitors, and software names attached to that build-out. On the filing side, the 8K and 10Q are now there, so the earnings reaction is moving from headline mode into digestion mode. Clean reference point on the bigger chart. The year high listed here is 236.54. Not a target, just the scoreboard level if this post-print bid keeps pressing. Now rotate it to AVGO. Broadcom is the cleaner second read if you're asking whether this is an NVIDIA-only victory lap or a broader AI infrastructure tape. Different business mix, different exposure. Custom silicon, networking, hyperscaler-specific compute, but it sits right in that same spending cycle. So here's the thing I'm watching on this chart. Does AVGO act like buyers believe AI CapEx is broadening, or does it just pop at the open and lose interest? If it participates in an orderly way, that tells you the market is not treating NVIDIA's quarter as isolated. MRVL is the more sensitive one in this little basket. Marvell gives you that optical, interconnect, custom silicon angle. The plumbing layer of AI, basically. And that matters because when AI headlines get hot, the market loves to pull every name with an AI tag higher. But the company question is colder than that. Are orders converting into revenue? Are margins protected? And is the timing real? So with MRVL, I'm less interested in a single green candle and more interested in whether the bid keeps coming after the first reaction. That's how you separate a theme trade from a business upgrade. And then, AMD. This is the competitive read. The question is not, can AMD magically become NVIDIA tomorrow? That's not the business story. The question is whether customers keep wanting a second source for accelerators, whether the software stack keeps improving, and whether a bigger overall AI budget lets more than one semiconductor company win. So here's the company desk takeaway. NVIDIA is the anchor. AVGO tells you if hyperscaler silicon is getting paid. MRVL tells you if the connectivity layer is getting respect. And AMD tells you if competition is being rewarded instead of ignored. If QQQ stays firm, and only NVDA works, leadership is narrow. If the group joins, that's a broader AI tape. Coming up, we'll flip back into the market mover scan and see what's actually hitting the tape right now.
Thanks, company desk. All right, markets desk is grabbing the movers board because the tape is mixed, but these small cap names are still doing their own crazy thing. QQQ's green, SPY's green, IWM basically flat, so this is not broad small cap lift. This is specific momentum. PPCB still sitting at the top, up about 222%, 56 million shares, massive relative volume. VNRX is right behind it, 84% move, 237 million shares, just absurd liquidity for a 62-cent name. Then I want MIMI, MERC, and WKSP on deck. WKSP is the sneaky one for volume, 280 times relative volume down the board. So yeah, this board is loud. Start with PPCB on the 1 minute. This is still the heavyweight on the board, but heavyweight in small cap land means dangerous, not safe. Current print around 345, market cap under 10 million, float around 1.25 million, and Pro Terminals still marks dilution risk high. So the markets desk is not treating this like a clean institutional breakout. This is tape, volume, and levels only. The thing I'm watching now, can it accept above 360, or is every push getting sold into? If 325 cracks, that's where the character changes for me. That's the trap warning, because a 200% runner can give back air pockets fast. Huge move, huge volume, but you've got to respect how thin this name is. Now flip me to VNRX. This one's wild too, just a totally different flavor than PPCB. We're talking a 60-cent healthcare runner, up about 84%. And look at the volume, 237 million shares. That is not normal churn, that's the whole tape finding it. The float's around 6.6 million, dilution risk is flagged high. So yeah, the candles matter way more than the story here. For me, the first line is pretty simple. Does it keep reclaiming that 60-cent area, or does every pop above it get sold right back into the bid? If buyers keep defending 60 and it starts building higher lows, okay, momentum's still alive. If it loses 60 with that much volume already printed, that's where these can go from runner to trap really fast.
Thanks, Markets Desk. Okay, quick macro check, because the board is loud, but the tape's actually pretty nuanced. On the portal, SPY is sitting around 768.8, up 0.35%. QQQ is doing the heavy lifting at 716.9, up 0.77%. And IWM is slightly red at 298.7, down 0.09%. That's the whole morning in one line. Mega cap growth has the keys. Small caps are still in the backseat, asking if we're there yet. VIX is 18.39, down about 0.78%. So the risk thermostat is lower. Not cold, just lower. And that matters after all that single-name chaos we just saw. When volatility is fading while Nasdaq leads, the market is basically saying, I can handle weird, just don't hit me with a rates tantrum. All right, quick news brief from the macro desk. We're starting with Apple because when Apple twitches, the QQQ usually feels it. ProTerminal is tracking the leadership watch around Tim Cook's 15-year run. The number attached to that era is a 2,150% shareholder return. And the question now is whether John Ternus has the hardware chops to extend that operating rhythm. Why it matters? Apple is not just a phone story. It's an index weight story. And with QQQ around 716.9, the market cares whether the next Apple chapter sounds like continuity or a wobble. Wall Street loves succession planning right up until it has to price it. Next up, Propant Biopharma, PPCB. The headline here is new preclinical pancreatic cancer data for PRP, showing more than 90% tumor growth inhibition and more than a 2.5-fold survival benefit in pancreatic cancer models. That is why this name is getting attention on the board, with PPCB around 3.35 and up more than 200% on the session. The important qualifier, and it's a big one, this is preclinical. That can bring real investor interest. But the market still needs human clinical validation before the science becomes anything close to bankable. All right, top of hour market minute. If you're just joining us, it's 10:06 in New York, and the tape is doing that very 2026 thing where mega cap tech is driving and the rest of the market is checking its emails. SPY's at 768.96, up 0.38%. QQQ 717.55, up 0.87%. IWM 298.39, down 0.18%. VIX 18.40, lower by about 0.75%. So this is not an everything rips tape. It's selective risk on. Nasdaq leading, vol contained, small caps lagging, breadth still mixed. Here at the macro desk, that says the bid is real, but it's not democratic. The cross-asset tell is the dog that isn't barking. Bonds are calm. TLT 83.22, off 0.10%. IEF basically flat at 93.31, while the dollar proxy is 28.01, barely lower, and the yen proxy is 57.53, also barely lower. That gives equities a little breathing room, but oil is still the sticky note on the monitor, 128.98, up 1.28%, while gold's down 0.55% at 419.02. So the market's basically saying, we can handle risk, but don't ignore energy inflation. Crypto betas got a bid too. BITO up 1.51%, coin up 3.81%, MSTR up 7.53%. Animal spirits, just with a seatbelt. What I'm watching next? QQQ above 718.3, IWM below 298, oil above 129, plus the noon Jackson Hole block before the 12:30 data slate. Coming up after this reset, market movers, then an options vol beat, which is pretty convenient with VIX parked in the high 18s.
Thanks, Macro Desk. All right, Markets Desk is back on the movers board. Different tape here. QQQ's green, SPY's green, IWM's red. So this is not some everything rips small cap tape. This is narrow. It's catalyst driven. It's jumpy. Top of the board. PPCB still the monster, up about 203%, 271 times relative volume. Oof. VNRX is still parked around that 60-cent scoreboard area. MIMI's at 280-ish. WKSP's near 78 cents. And the levered products, OKTG, CRMG, CRWL, we're separating those out again. We're not doing a sleepy leaderboard. I want candles. First chart is PPCB, because that pre-50 line we already scored both ways is still the fight. Okay, PPCB on the 1 minute. This is exactly the kind of chart the markets desk wants to score, not marry. Price is 324, still up about 203%, but it's trading under that 350 level where we already had the pop through and the fail. That matters. When a low-float biotech does 58.6 million shares against a normal day around 215,000, candles can look clean for 2 minutes and then just air pocket. Float's about 1.25 million, market cap's under 8 million, dilution risk is tagged high. So the read is simple. Reclaim 350 and actually hold it, then momentum has proof again. Stay below it, and that old trigger can turn into supply. If this loses $3, I'd expect the tape to get a lot more slippery. Not saying touch it, just reading the battlefield. Now VNRX? This one's the cleaner scoreboard name for me because we already had that 60-cent line open. Board has it at 60.3 cents, up about 78%, and look at the tape. 242 million shares, 112 relative volume. That's not casual interest. That's the whole crowd living in this thing. So the grade is simple. Above 60 cents, the reclaim is still alive, and dip buyers can argue they're defending the breakout area. If it starts living back under 60, then it's not a reclaim anymore. It's a failed reclaim, and on a high dilution risk healthcare name that can unwind fast. I don't need to overcomplicate it. 60 is the line. Hold above it, constructive. Momentum traders get a lot less patient. Mimi, next. Totally different personality. Tiny float, about 1.38 million shares. So this can feel controlled 1 minute and then get ruggy out of nowhere. Board price is $284, still up 58%, but the control check is that $3 area. If buyers can't reclaim 3, then the fade is still in charge, even if it's orderly. What I'm watching on the 1 minute is whether lower highs keep stacking under 3, because that's usually the tell that the early chase is trapped. If it curls back through 3 and actually holds there, fine, that's a better look. But under 3, with this float, you don't want to pretend it's stable just because it pauses for a couple candles. WKSP now. This is the Worksport move. And yeah, the record order headline is the excuse, but the chart's got to prove it. Board's got it around 77, 78 cents, up 52%, with 84 million shares already traded. That's 336 times normal volume. So there's real attention here. What I care about on the 1 minute is whether this push is actually finding buyers above that prior 65-cent risk line, or if it's just headline chase candles that keep wicking out. If it can keep accepting above 77, 78, that's constructive for the tape. If it starts losing that area, and especially fades back towards 65, then the whole character changes. That's where the earlier breakout turns into a failed move, and with high dilution risk on the profile, you don't want to get hypnotized by the percentage gain. And then CELU, fresh biotech momentum name on the board. This one's 116, up about 32%. But look at the relative volume, 239 times average. That's not sleepy. 23 million shares traded versus basically 96,000 average, so the crowd found it fast. The cleaner read for me is the dollar area. If the chart is building from that $1 base and holding above it, cool. That tells you dip buyers are defending the obvious line. But if it's just stretching into 116, 118 with late buyers piling in, that can get crowded really quickly, especially in biotech, 7.2 million float, high dilution risk, all the usual small cap landmines. So I'm not chasing the green candle mentally. I'm asking, does $1 stay support? And does volume confirm the next push instead of just giving you a pop and drop? WNW, real quick, just a scoreboard check because this one already gave us the downside hit. We flagged that 340 area earlier and yeah, it tagged it. Now it's trying to reclaim right around 344, 345 on the 1 minute. Board's got it at 344, up about 39%, and the volume is real. 10 million shares, 131 relative volume. But remember, tiny float, high dilution risk. This is not a clean big cap trend. For me, the line is simple. Above 345 and it's a reclaim attempt. Back under 340 and the trapdoor is open again. Last bucket before we hand this off. OKTG, CRMG, CRWL. I want to separate these from the actual operating company runners because these are levered 2x products. OKTG is a 2x OKTA daily ETF. CRMG is 2x Salesforce. CRWL is 2x CrowdStrike. So when you see plus 46, plus 39, plus 35 on the movers board, that's not the same story as a biotech float squeeze or a fresh company headline. It's amplified daily exposure to the underlying stock, with the reset and the leverage baked in. OKTG's at about $38 on 109,000 shares. CRMG's the more active one at 4.3 million shares. And CRWL is up big, but only 1.86 relative volume, so I'm not treating that like the same heat we saw in PPCB or VNRX. Good names to know what they are, but for the real momentum list, I'm keeping them in a separate ETF bucket. All right, movers board is cleaned up. Let's push it forward and see what the next desk has on this tape.
Thanks, Markets Desk. Okay, quick vol check because this tape is acting like it had one coffee, not three. VIX is sitting around 1846, down just a hair, call it minus 0.4%. That matters because SPY is green, QQQ is leading, but breadth is still mixed and IWM is red. So volatility is not screening stress right now, but it's also not asleep on the couch. Here at the macro desk, that 1850 area is still the little tripwire. Below it, the market can keep pretending everything is orderly. Above 1850, especially if QQQ starts slipping, that's when the options bid usually starts getting louder. Now let's put Microsoft on screen, because MSFT is a good read on whether this is real megacap conviction or just index gravity doing index things. The stock's up about 0.2%, trading right around that 500 handle. And the 1-minute chart has been messy in the most Microsoft way possible. Polite on the surface, drama underneath. You had the early push from about 492, then that hard flush toward 490.08 on heavy volume. And then buyers dragged it all the way back toward the high at 501.73. For options vol purposes, that's the map. 501.73 is the upside pressure point, 500 is the magnet, and 493 is the line where this recovery starts looking a lot less cute. No chain gymnastics here, no strike guessing, just the underlying telling you where volatility may wake up. Okay, and just to tie the headline side into the vol side, on the Microsoft page, the recent news is mostly AI and cloud ecosystem stuff. Azure AI features, European enterprise AI governance, marketplace distribution. That matters, but it's not like there's one huge shock headline on the tape right now. Filings-wise, you've got recent Form 4s, plus the 10K and 8K back at the end of July. So again, the cleaner read today is the price action around that 500 handle. And this is why MSFT is such a good vol tell. When a mega cap this big parks around a big round number, it can pin the tape and mute realized volatility for a while. Chop, fade, reclaim, chop again. But if it starts actually accepting above 500 and pressing back toward that 501.73 high, or if it loses 500 and sellers lean on it, then single name vol can wake up fast because everybody's watching the same level. Same with VIX. 1850 is the line I care about for follow through. Below it, the market's still acting pretty relaxed. Above it and holding, okay, then you start respecting that maybe hedges are getting bid again. All right, let's leave the vol check there. We're going right back to the movers board next, because there are some names actually moving way harder than this index tape.
Thanks, Macro Desk. All right, movers board is back up, and this is where the action is. Tape's green but selective. QQQ's leading, IWM's red, breadth mixed. So if a tiny name is up 100% plus in this tape, we need volume proof, not vibes. Top of the board, PPCB up about 186%, 61 million shares, 282 times relative volume. That is monster activity. Right under it, VNRX. We've got scoreboard on that one. That 60-cent reclaim we flagged got hit, and now it's sitting around 64 cents. Then MIMI at plus 58. WKSP still on ridiculous volume, almost 400 times relative volume, and WNW trying to stay alive around that 345 reclaim zone. Oof, busy board. We're not treating the leveraged ETF names like normal runners though. OKTG, CRMG, CRWL, PUR, different bucket. PPCB on the 1 minute now. And yeah, this is exactly why the market's desk keeps score. It's still the headline gainer, but it is not clean. Price is around 306. It already lost that pre-50 proof area earlier, so 350 is overhead now. Not momentum until it actually reclaims and holds it. The real danger line is $3. If PPCB starts living below 3, that's where the move can go from wild runner to trapdoor pretty fast. Tiny float, about 1.25 million shares, but 61 million shares traded already. That's the whole story. Supply is constantly changing hands, and dilution risk is marked high. So this is not one where you just cheer the percent move and ignore the balance sheet risk. The setup is simple. Above 3, it's trying to stabilize after the fade. Below 3, sellers are still in control. I want the next name right after this because VNRX is also giving us a live level test. VNRX next. And this one, scoreboard-wise, yeah, that 60-cent reclaim is the whole trade location right now. We're at about 64 cents, up basically 90%, and the volume is ridiculous. Almost 250 million shares, over 115 times normal. So the reclaim hit, credit where it's due. Now the question is whether 60 cents turns into support or whether that was just a liquidity grab and it rolls back under. For me, if this keeps building above 60, that's constructive. If it starts accepting back below 60, that's your failed breakout look. And don't ignore the structure here. Small healthcare diagnostics name, roughly 6.7 million float, high dilution risk showing on the board. So it can move fast, but it can also rug fast. Clean level, messy vehicle. Now, MIMI. Different flavor. This is the robotics partnership momentum name on the board, and it's still holding green, up about 58%, around 2.84. But look where it is. It's not miles above the breakout zone anymore. It's sitting right in that $2.80 to $3 decision area. So I don't want to chase the headline here. I want to see if buyers can actually defend 280, then whether $3 becomes resistance or gets reclaimed with volume. Float's tiny, about 1.38 million. So the candles can look explosive, even when the actual liquidity is thin. Relative volume is solid at 9 times normal, but compared with VNRX or WKSP, this is more of a headline momentum check than a monster volume anomaly. WKSP now, and this is the insane relative volume one. We're talking almost 400 times normal volume, about 100 million shares already. And the stock's sitting around 73 cents, up about 44%. So the question is not, is there attention? Obviously there is. The question is this 72 to 78 cent zone acceptance, or is this where supply is getting dumped into the chase? I want the chart living above 72 if bulls are actually in control. If it keeps popping into 78 and rejecting, that starts to feel way more like distribution than continuation. And remember, high dilution risk on this name. So with these sub-dollar runners, clean candles matter a lot more than the headline percentage move. WNW next. Quick scoreboard check here. Earlier that 340 area hit to the downside, and now the reclaim level is 345. We're basically right there, 347-ish, up about 40% with 149 times relative volume. But this is the tiny float trap risk name. Float around 1.2 million, market cap tiny, high dilution risk. So I'm not treating a 2-cent reclaim like it magically fixes the tape.
Above 345. Okay, it's trying to regain control.
Back under 340, that's the fail level again. And these can move brutally fast when liquidity disappears. Alright, last stop on the actual single stock runners, CELU. This is Cellularity, biotech name, trading basically right on that 110 line. About $1.10, up 25%, and the volume is wild. 25 million shares versus a normal day under 100,000. So that's roughly 260 times relative volume. The chart read here is pretty simple. $1 is the base everyone's watching. 110 is the pressure point. If CELU can stay above 110 and not instantly reject, okay, momentum's still alive. If it loses $1, that whole look gets a lot weaker fast. And yeah, important caveat on this one, high dilution risk on the board, biotech, small cap structure, so this is not the cleanest sandbox. Now, the other names sitting up here: OKTG, CRMG, CRWL, PUR. I want to separate those from the runners we just charted. Those are leveraged ETF products. OKTG is 2x OKTA, CRMG is 2x CRM, CRWL is 2x CrowdStrike, PUR is another daily 2x style product. So when you see 46%, 40%, 37% on the movers board, that is not normal single stock price discovery, the way PPCB or VNRX is trading. That's product leverage off the underlying move, daily reset math, and it can gap around fast. Different beast entirely. So scoreboard for this scan: CELU, $1 base, 110 reclaim, VNRX, 60-cent reclaim, WNW, 345 reclaim, and PPCB still the messy headline gainer. Good movers board. Coming up, let's pivot off the chaos and hit the news flow next.
Thanks, Markets Desk. Breaking AI headline first. ProTerminal's newsroom is tracking NVIDIA forecasting around 70% sales growth next year. And yeah, that is the kind of number that makes the whole growth complex sit up a little straighter. What happened? NVIDIA is pointing to 2027 sales growth near 70%. Basically saying the AI spending boom still has legs. Not weeks, not one quarter, but potentially years. What we know? The demand signal is still strong, and the market is treating it like a broad AI infrastructure headline, not just a chip company headline. What we don't know yet: the exact mix behind that ramp. How much is already embedded in estimates, and whether execution, supply, margins, or customer concentration become the next debate. Market read right now. QQQ is around 718.4, up just under 1%, while SPY is around 769.3, up 0.4. So the tape is saying growth leadership is alive, but it's not exactly a full market parade. IWM is still slightly red, because apparently small caps didn't get invited to the AI banquet. Staying with NVIDIA. Second headline: the desk is seeing talks for NVIDIA to acquire Hugging Face for more than $13 billion. Important wording here: talks, not a closed deal. The story matters because Hugging Face sits right in the AI developer ecosystem. So if NVIDIA is serious about owning more of the software layer, that's not just more GPUs and racks, that's more of the workflow around building AI models. The bull read is ecosystem depth. The question mark is valuation and integration, because $13 billion plus is not exactly lunch money, even in NVIDIA land, where apparently lunch comes with a data center attached. For the market, this keeps the AI trade framed as chips plus software plus platforms, not just semis ripping in isolation. Now, quick rotation through the rest of the tape. CrowdStrike shares are jumping after an earnings beat and a raised outlook, with the headline move around 8% pre-market in the data we're tracking. Why it matters? Cybersecurity is acting like part of the AI infrastructure budget too. Enterprises are still spending where the threat surface is growing. Salesforce is the next one. Stock up after an earnings blowout and upgraded outlook, with the reported pre-market jump around 11%. That's the software side of the same story. Enterprise budgets not exactly rolling over. And one macro note to keep in the back pocket. Oil is sitting around $128.98, up 1.28%. While ProTerminal is tracking the OPEC Plus influence story around Iran war supply dynamics and China's growing role.
Thanks, Macro Desk. Quick ProTerminal pit stop while the tape's still hot. This is the dilution center. This is where the Markets Desk checks the stuff you do not want to ignore on small caps. Shelves, ATMs, offerings. Anything that can turn a clean-looking chart into an oof real fast. Not a scare page, it's context. Risk first, chart second. Now flip back to the board. This is the engine room for the show. Market movers, top gainers, top losers, relative volume, float, market cap, all in one place. And look, this matters today because the index tape is greenish in QQQ, SPY's up, IWM's basically flat red. So when a small cap is up big on monster relative volume, that's not the same read as a mega cap grinding with the market. The board is not a buy button.
And then we click into a name. I'll use WKSP just as the demo because it's been active on the board. First stop for me, filings. Has the company filed something fresh? Is there an offering, a shelf, anything that changes the risk profile? Then I'll hit Insider Trades. Not because one tab gives you the answer, it doesn't, but because it keeps you from trading blind. Price is one piece, paper trail is another. Last piece, the 1-minute terminal chart. This is where we marry the story to the tape. Where volume hit, where the wicks are, where VWAP is, whether the move is accepting higher or just spraying candles and fading. Data can be incomplete or delayed sometimes, so you still use your head. But having movers, dilution, filings, insiders, and the chart all in one workflow, that's why we use it live. If you want the same setup, it's ProTerminal. Sign up at proterminal.io. Coming up, we're right back into the movers scan.
All right, back to the movers board. Markets Desk wants the names actually pulling tape right now. QQQ's still the clean leader. SPY's green, IWM's a little red. So this is not some everything rips small cap tape. It's selective. PPCB still top of the board. VNRX right behind it. CELU heating up. Then MIMI and WKSP. Oof, look at WKSP's relative volume. Nearly 500 times average. That's the kind of number where you stop scrolling and pull the chart. Scoreboard check too. Some of those earlier reclaim levels fired, some failed, some no victory lap. Fresh board, fresh read. One chart at a time. PPCB first. Pull it up. This is still massive on paper. About 269 now, up roughly 150%. 65 million shares, 300 times relative volume, and the float is only about 1.25 million. That's wild. But here's the Markets Desk problem with it. The easy squeeze look already got messy when that prior downside line cracked. So I'm not chasing the headline percent. I'm watching whether 270 becomes a clean reclaim, or whether this starts leaking toward 260. Above 270, okay, bulls at least have a pulse again. Below 260, that's sellers taking control of the next 1-minute rotation. And with the high dilution tag on a tiny biotech, you've got to treat every pop like it can reverse fast. Fun chart to watch, not a chart to get casual with. VNRX now. This is the one where I'm not trying to overcomplicate it. We're at about 63 cents, up 86%. And the crazy part is the tape, 260 million shares. That is not a little retail burp. That's a full-on liquidity event. So the grade right here is the 63-cent area. If this keeps accepting above 0.63, fine, bulls are still defending the upper shelf. If it starts living under 0.63, that's where this can turn from controlled pullback into, okay, everybody who chased the pop is now leaning the wrong way. And remember, healthcare microcap, high dilution risk on the board, so I'm reading the candles, not marrying the story. Now CLU. And this is still the cleaner operating company runner on relative volume for me. Price is sitting around 138, up 57%, but look at the relative volume. 327 times normal. That's why this one stays on the screen. The question is whether 138 is real acceptance or just the cause after the blow-off candle. If it's holding that area, you can see why traders keep giving it a chance. It's not immediately puking back through the prior shelf. But if 138 starts failing and the candles get heavy, then the story changes fast. Because after that kind of RVOL, failed acceptance can unwind really quick. So CLU gets a better grade than the random one-candle flyers, but the level has to do the work. WKSP next. And yeah, this is the one where the reclaim mattered because it did not just tag the level and die. We're sitting around 76 cents now, up basically 50%. But the number that jumps off the page is the volume. 125 million shares, almost 500 times relative volume. That is insane turnover for Worksport. So the chart read is pretty simple for me. If it keeps accepting above that 75-76 cent pocket, momentum traders are still involved. If it starts losing that area and volume dries up, then it can turn into one of those nasty penny stock fades real quick. High dilution risk name too, so I'm not marrying this thing. I'm just respecting the tape while the volume is still there. Now, MIMI, different flavor. This is around 273, up about 52%. 35 million shares, but the float is the real hook. About 1.38 million, That's tiny, so when headline momentum hits, especially with any robotic-style buzz around the name, the moves can get exaggerated fast. But look, I don't want to chase the headline. I want to see whether the chart is holding the prior decision zone or bleeding underneath it. Right now, if it's living below that 280 area, I'd call it a little more suspect. Still strong on the day, still huge volume, but not as clean as a name that reclaims and holds. 260 is the downside line I'd keep on the board for whether buyers are still defending the move. WNW next. Quick scoreboard check. Not going to overdo this one. Screens on the 1 minute, and the live print is around 354, up about 43%. Volume's the headline. 12.5 million shares versus an average around 80,000, so relative volume is still huge, about 156 times normal. The thing I care about here is just whether it's still holding bid after that earlier burst, because with a float around 1.2 million and high dilution risk on the profile, these can move fast both ways. Nice mover, definitely active, but this is one where I'm keeping it simple. Tape, volume, spread, and whether buyers are still defending the move. Now, flip the board over for the ugly side. KXIN is the red name on this list. Around 367, down basically 30%, and the volume's only about 400,000 shares. So this is not the same kind of monster tape we just saw in PPCB, VNRX, WKSP, all that. Relative volume's about 1.4, dilution risk shows high, and it's consumer cyclical auto dealership exposure out of China. So for me, this is more of a weak board check than a momentum name. Then quick reminder on the products sitting in the gainers. OKTG, CRMG, CRWL. Those are leverage single name products, 2 times daily exposure tied to OKTA, Salesforce, CrowdStrike. So yeah, they can look wild on the movers board, but that's product structure, not an operating company suddenly up 40% on its own news. Treat those totally differently when you're reading the board. All right, that's the fresh movers pass. We've got the real runners, the red board warning, and the leveraged ETF bucket separated out. Let's hand it forward and hit the next beat.
Thanks, Markets Desk. Let's switch from percent movers to the actual AI chip story. NVDA is the lead domino here. Stock around 224.80, up a little over 7%, while QQQ is up about 1%. So yeah, that's not just beta, that's a real single name reaction. And here at the company desk, the question isn't, is AI hot? We know that. The question is, what actually changed? The print says $96.2 billion in quarterly revenue, up 106% year over year, with 75% gross margins. That's the market paying for scale and still getting margin. On the chart, I'm watching this 225 area as the first sanity check. Above it, buyers are still paying up. Below it, the earnings gap starts to feel more two-way. Now flip from the candle to the actual company catalyst for a second, because this is the part I don't want to handwave. The AWS release is not just a cute partnership headline. It says AWS and NVIDIA are set to deliver 2 million additional GPUs, plus next-gen infrastructure around Vera CPUs, advanced networking, open models, agentic AI, physical AI, the whole stack. That matters because it tells you the customer side of the AI build-out is still leaning in, not tapping the brakes. The stock move is really the market saying, okay, this demand curve still has legs, and NVIDIA is still sitting right in the toll booth. And then the skeptical part, because that's our job at the company desk. This is already a $5.4 trillion company. It trades with a massive expectation load. So when the 10Q and the 8K hit after the results, the market isn't just asking whether the quarter was good. It was obviously good. It's asking whether the operating model stays this clean as the base gets bigger. Revenue up 18% quarter over quarter is wild at this size, but the bar moves up every time they clear it. That's the tension in NVDA right now. Incredible execution, but absolutely no room for sloppy follow-through. Now, the first read-through name I want on screen is AVGO. Broadcom is not NVIDIA, right? Different mix, different model, but it sits right in that AI infrastructure conversation through networking, custom silicon, and big enterprise data center spend. So the question on AVGO is not, does it copy NVDA tick for tick? It shouldn't. The question is whether investors treat the AWS Nvidia news as confirmation that AI factory capex is still broadening. In a tape where breadth is mixed, a steady bid in a large cap semi matters more than a noisy 1-minute spike. MRVL is the more sensitive read-through for me. The headline flow this morning is basically setting up Marvell's AI test right after Nvidia's monster quarter. And that's important because this is where traders can get a little lazy and say, NVDA strong, all AI chips strong. Not always. MRVL has to prove that the demand Nvidia is showing actually flows into its own lanes. Networking, optical, custom silicon exposure, that kind of infrastructure layer. If the chart holds a bid, that tells you the market is buying the second derivative story. If it can't, then Nvidia may just be sucking all the oxygen out of the room. And then AMD is the tension point. This is the name where the story can cut both ways. One read is, if Nvidia and AWS are talking about millions more GPUs, the AI pie is huge, and AMD may get spillover demand. The other read is, Nvidia keeps extending the lead, keeps bundling hardware, networking, software, and ecosystem, and that makes the competitive gap feel wider. So I'm not treating AMD as automatic sympathy. I'm using it as a check on whether this theme is expanding or concentrating. For now, NVDA is the clean leader. AVGO and MRVL are the infrastructure confirmations. AMD is the competitive response chart. Coming up next, we'll kick it back into the mover scan, then Earnings Spotlight can dig into the software side of this tape.
Thanks, Company Desk. All right, Markets Desk is back on the movers board. And yeah, this board is still spicy. QQQ's up about 1%. SPY is green, but IWM is basically flat and breadth is mixed, so these little runners are not just riding some monster small cap wave. PPCB is still top of the screen, up about 165%, 67 million shares, 310 times relative volume. That is wild tape. CELU right behind it, basically a double, and then VNRX with 260 plus million shares traded under $1. Oof. WKSP is still doing huge relative volume too, and MIME is hanging in that top 5 cluster. So here's the Markets Desk plan. Board first, then we're going 1-minute chart, name by name, no wasted words, momentum, volume levels, and whether this is actually holding or just throwing wicks. Okay, pull PPCB first. This is the top dog on the board right now. Propanc Biopharma. Tiny biotech, about a 1.25 million share float. Market cap still under 8 million, and it's trading roughly 283 after that huge move. So don't let the percent move fool you. This is still a microcap healthcare runner with high dilution risk. The volume is the story. 67 million shares versus an average around 216,000. That's not normal. On the 1 minute, what I care about now is whether the high $2 area keeps getting accepted, or whether every pop gets sold into immediately. The clean scoreboard line now is $3, not a target, just the round number reclaim. If PPCB can actually get above $3 and stay there on real volume, then buyers are proving something. If it keeps wicking and fading under that, that's a totally different tape. CLU next. And yeah, this is the other monster on the board. We're not going to redraw the whole level map again, but just look at the acceptance here. Stock's around $1.76, up basically 100%, and the volume is wild. 46 million shares versus an average under 100,000. Relative volume near 480 times. So the question on this one is simple. Does it keep living above that 175 area, or do we start seeing candles close heavy underneath it? For a small biotech with high dilution risk, I don't care how pretty the spike looks. If the bids stop refreshing, these can unwind fast. But right now, as long as it's holding that upper zone, the tape is still saying there are buyers accepting the move, not just one panic candle. Now, VNRX, totally different feel because this is a sub-dollar runner, but the turnover is just ridiculous. 263 million shares already, on a float a little over 6.5 million. That's the float changing hands over and over and over again. Price is sitting in the low 60s, up 80+%. And what I'm watching on this chart is whether the low 60-cent trade keeps absorbing selling, or whether every pop is getting hit immediately. This is also a high dilution risk name, so you have to respect that overhang. These cheap healthcare runners can look incredibly liquid right until they don't. If it starts spending real time below 60 cents, that's where the character changes for me. Not a prediction, just the tape line I'd want on the screen. WKSP now. And this one is wild because it's not the biggest percent move on the board, but 532 times relative volume is the tell. Worksport sitting around 77 cents, up about 50%. And this is that mid 70-cent area where I want to see if buyers are still actually in control or if it's just churning. The tape question is pretty simple. Can it keep accepting above 75 cents, or do we start seeing every little pop get sold back into? Because with a 14 million-ish float and high dilution risk on the profile, you don't want to marry the story here. You respect the volume, but you also respect how fast these sub-dollar names can round trip. If 75 starts cracking clean, that's the first warning that momentum is getting tired. Flip Mimi. This one's a different animal. Industrial's name? Tiny float, like 1.38 million shares. And it's still up roughly 49% around 268. But the relative volume is nowhere near WKSP. So for me, this is less about, oh my gosh, huge board name, and more about whether the chart is rebuilding after that earlier break, or whether it's starting to fade into lower highs. I'm watching the 270 area first. If it can't hold above that zone and keeps slipping back toward 260, that tells you the bid is getting a little softer. But if it reclaims and starts holding above 275, then at least the tape is trying to rebuild. Tiny float risk is front and center here though. These can look clean for 3 candles, and then one seller changes the whole setup.
Thanks, Markets Desk. Breaking AI headline first, because this is the one moving the weather map right now. ProTerminal's newsroom is tracking NVIDIA, forecasting about 70% sales growth next year. Basically saying the AI spending boom still has years left in the tank. What we know, demand for AI accelerators is being framed as durable, not just a one-quarter pull forward. Why it matters. QQQ is already the leader at 717.5, up about 0.86%. SPY is at 769.5, up 0.45%. And VIX is tucked near 18.35. So the market is treating this like growth fuel, not a stress event. What we don't know yet, the exact mix, timing, margins, customer concentration, or how much of this is already baked into NVDA. The level on our board remains 225, the company desk's sanity check. If it keeps accepting above there, the bid is still paying for the story. If not, the spreadsheet gets less heroic pretty quickly. Separate but same ecosystem, the desk is also tracking NVIDIA talks around Hugging Face at a reported valuation above $13 billion. That matters because NVIDIA isn't just selling picks and shovels. It's trying to own more of the mine. The unknown there is simple: deal terms, regulatory path, and whether integration actually adds value or just adds a very expensive hoodie to the cap table. Next big tech headline: Meta has agreed to an $18 billion settlement tied to social media harm claims. The market angle here is not politics, it's legal cost and regulatory risk becoming part of the mega cap multiple. For a company built on ad scale, engagement, and global policy scrutiny, $18 billion is not exactly couch cushion change. It's a reminder that platform margins now come with a legal line item. Then over in software, analysts are downgrading Intuit after earnings, pointing to a weaker growth outlook and a reset in expectations. That matters because today's tape is drawing a pretty hard line. AI infrastructure gets rewarded for capacity demand, while slower application software has to prove every inch of growth. NVIDIA gets the champagne flute. Some software gets the paper cup. And on the consumer side, Shein's Hong Kong IPO pricing is set around a $26.5 billion valuation. We don't have a regular US-listed common ticker to chart here, so treat this as a benchmark for appetite in high-growth e-commerce and new issuance. IPOs can be thin, jumpy, and sentiment-driven, especially when the consumer discretionary story is still mixed. Macro Desk cross-asset round now. First, the Bank of Korea raised rates by 25 basis points, as expected. Not a shock, But it matters because global central banks are still leaning against inflation, and that keeps pressure on currencies, funding costs, and risk appetite around the edges. Bonds are not exactly celebrating either. TLT is around 83.13, down 0.2%. Next, crude. We're tracking oil slipping on Middle East diplomacy hopes, but our live oil read is still around 128.88 and up about 1.2% on the session. So this is not a collapse. It's the market shaving some geopolitical premium inside a still expensive barrel. Lower energy helps the inflation math, but at that level, nobody's throwing a parade at the gas pump. Gold is also on the wire, with the market watching Fed Chair Warsh's comments. GLD is around 419.55, off 0.42%, while the dollar's basically flat near 28.02. So no clean safe haven stampede there. Real yields are still the steering wheel. Last quick one. VolitionRx reported 112% revenue growth in the first half and more clinical validation work. That helps explain why VNRX is on traders' radar. But it's still a small, volatile diagnostics name where execution and financing risk don't magically disappear. Coming up, Market Mover Scan gets the tape back under the microscope.
Thanks, Macro Desk. Let's put Ubiquity on the earnings screen. UI is not the loudest name on the board, but this is a really good company desk setup because the numbers look strong and the stock is kind of shrugging. We've got UI around the low 590s, down a little more than 0.5%, while QQQ is up almost 0.9%. So right away, that's the story. Good print, but not leading the tape today. On the 1 minute, this thing is choppy. 582-ish low, 602-ish high, and 590 is the pivot I care about first. If buyers can reclaim 590 and actually live above it, the chart looks a lot cleaner. If not, it's still just wide-range post-earnings chop. Okay, here's the actual earnings story. UI is on the unscheduled earnings list, and the latest company release we've got is the fiscal fourth quarter print. Revenue of $937.3 million. GAAP EPS of 4.70. Non-GAAP EPS of 4.73. The estimate showing in the earnings feed was 4.03. So on the face of it, that's a clean beat. Full-year fiscal 2026 revenue came in at $3.3 billion, with GAAP EPS of 15.85 and non-GAAP EPS of 15.95. And what does Ubiquity actually do? This is networking gear. Unify, Wi-Fi, switches, security gateways, cameras, service provider wireless, the whole infrastructure stack. So this isn't some vague AI concept trade. It's a real hardware and software ecosystem business. But here's the skeptical part. At about a $35.9 billion market cap and roughly a 45 times earnings multiple on the profile, the market is already paying for quality. The print helps the story, yeah. The question is whether it changes the multiple or just confirms what bulls already believed. Now let's go one layer deeper, because the earnings quality is actually the interesting part. The company filed the 10-K on August 21st, right with the results, and the balance sheet has cleaned up pretty nicely. Last reported quarter had about $368.7 million in cash and only $66.9 million in total debt. So net cash was about $301.8 million. That matters for a hardware company, because inventory cycles and demand swings can get ugly if the balance sheet is stretched. Margins are also a big part of the premium here. Trailing gross margin around 46%, operating margin around 36%, net margin around 29%. That's not normal commodity hardware economics. That's why investors treat UI differently. But, and this is a real but, the float is tiny, about 4.2 million shares against more than 60 million shares outstanding. That can make the tape weird. Wide ranges, thin liquidity, sudden gaps. So the business quality can be high, and the stock can still trade nasty intraday. Let's bring it back to the chart, because this is where the story has to prove itself. The company desk read is pretty simple. The print strengthens the fundamental case. Revenue growth, EPS growth, clean cash generation, strong margins. What it doesn't automatically solve
is valuation and reaction. The stock is still chopping under that 595 area, and 590 is the first reclaim line. Above 595, the tape starts to look like buyers are paying up again. Below the 582 low, then the market is telling you it's not ready to reward the print today. So for UI, I'm not treating this like a momentum explosion. I'm treating it like a quality earnings story, waiting for the price action to confirm it. Coming up, we'll get back to the movers board and see where the actual heat is this morning.
Thanks, Company Desk. All right, Markets Desk back on the movers board. And this board is loud. SPY's up about 0.5%, QQQ's doing the heavy lifting up 1%. VIX is lower near 18.3, but breadth is mixed. So when you see stuff up 80, 100, 140%, that's not just the market lifting everything. PPCB still top of the board, up about 145%. CELU nearly doubled, and the relative volume is insane, 675 times. VNRX has traded 268 million shares. That's a churn machine. Then you've got MIMI, WKSP, WNW, tiny float high-risk momentum, and the leveraged product names mixed in again. So we're not treating this board all the same. Operating company runners over here, 2X wrappers over there. First chart up, PPCB, because that $3 area we flagged earlier is still the scoreboard. PPCB first. This is the definition of hot small cap tape. 262 on the board, up about 145%. 70 million shares traded, 325 times relative volume, and the float's only about 1.25 million. Oof. That's why it can move like this, but it's also why it can rug fast. High dilution risk too. So I'm not pretending this is some clean, sleepy fundamental setup. It's tape, volume, levels. Earlier, the clean round number line was $3. It didn't accept up there. Now we're back in the 260s, so the feel is different. On this 1 minute, watch 275 above as the first real reclaim area. If buyers can't get it back there and hold it, pops are just getting sold. Under 250, that's where this starts feeling more like post-squeeze air pocket risk. Great volume, nasty risk.
Thanks, Company Desk. Quick stock whisperer check on the paper book. This is the show's simulated paper portfolio, so don't treat it like a copy trade feed. We're grading process. The new ad is CRM, 30 shares long, filled at 249.35. Last showing 249.38. So basically flat, up 75 cents on total paper P&L. The setup is simple. Earnings blowout, upgraded outlook, and large cap software is getting rewarded, while QQQ is up almost 1%, and VIX is backing off. I'm not calling that a victory lap. I just want to see the gap hold. My confirmation line is 252.50. Defined risk is already on the sheet. Stop at 241.80. Profit order at 263.50. Rest of the simulated book, quick. BABA is still the cleanest short. 80 shares from 120.88. Last 116.07. Plus 384.80. XOM short is working too. 60 from 160.33. Last 156.42. Plus 234.60. NVDA long is protected now. 40 from 223.91. Last 225.90. Plus 79.60. HSBC is just a small green short. Plus 15.90. And ZM is the one not behaving. Short from 96.36. Last 97.01. Down 65 bucks. I'm not hiding that. On orders, BABA cover is parked at 115.50 with a 117.40 stop. XOM is 155.50 by 159.20, and NVDA has 234.50 above with the stop sitting 223.90. No new clicks here. CRM was the fresh entry. Coming up, quick pro terminal plug, then back to movers.
Thanks, stock whisperer. Quick tool check while the tape's still moving. This is the stuff we're using all morning here at the Markets Desk. ProTerminal pulls the research stack into one place. And first thing, boom, dilution center. For small caps, this matters. Shelves, ATMs, offerings, not a buy signal, not a sell signal. Just risk you want on the screen before you get trapped chasing a candle. Now, flip back to the movers board. This is the heartbeat of the show. Top gainers, losers, price, percent move, relative volume when it's there. All in one shot. And look, names like PPCB and CELU are exactly why this board is useful. Not because you blindly chase green. No, you use it to ask, where's the volume, what's the float context, and is the move clean or just a nasty squeeze and fade setup? Then, when a ticker actually deserves a deeper look, you don't guess. Pull the profile. Here's CELU as the example. Filings first, because the filing trail tells you what can hit the supply side. Then, insider activity. Then, news. Ooh, this is the workflow. Chart gets you interested, but filings and headlines keep you honest. Data can be incomplete or delayed sometimes, so you still read the actual docs, but having it organized like this saves a ton of dead time. And then we go right back to the tape. 1 minute terminal chart, candles, volume, wicks, VWAP area, the whole thing. That's the loop. Movers board, risk checks, filings, news, then chart read. Everything you're seeing on this stream is ProTerminal. If you want the same setup on your desk, sign up at proterminal.io. Coming up, we're right back into a market mover scan, so keep this board open.
All right, Markets Desk back on the movers board. Let's separate the real volume from the shiny percentage moves. Screen up here. SPY's up about 0.5%. QQQ's up 1. VIX is red, but breadth is still mixed. So this isn't some full risk-on carpet bomb. Top row is PPCB, still up about 146% at 263. Then CELU up 136% at 2.08. And yeah, that CELU 1.75 line we flagged earlier got hit, so score 1 for the level watch crowd. VNRX is still up 72% but sub-dollar. MIMI almost 47%. Then you've got the geared ETF stuff. OKTG, CRMG, PUR, CRWL. Different animal. I want operating company tape first. PPCB, CELU, VNRX. Then we'll see if MIMI and WKSP deserve more screen time.
Thanks, Markets Desk. All right, top of the hour market minute if you're just jumping in. It's 11:01 Eastern, and the tape is leaning growth. SPY 770.3, up about 0.5%. QQQ 718.7, up just over 1%. Russell barely green at 299.2. VIX down at 18.30. So this is not some everything rips confetti cannon market. Breadth is still mixed, but the money is pretty clearly paying up for large cap growth again. The simple chain here, AI spending optimism plus strong software earnings keeps Nasdaq bid. Volatility cools a little, and small caps are basically saying, that's nice, call me when money gets cheaper. Cross asset, it's calmish but not sleepy. TLT is 83.17, off about 0.15%. IEF is basically flat at 93.30, so bonds aren't screaming. The dollar proxy is 28.005, just a hair lower. Gold is almost flat at 421.27. Oil is the firmer one at 128.07, up 0.57%. That tells me this is more selective risk on than panic hedge. Not everyone is hiding under the desk. Crypto beta is hotter. BITO up 2.5%. Coin up 5.35%. MSTR up 10.1%. Crypto is volatile and unregulated, so here at the macro desk, I read that more as animal spirits than gospel. What I'm watching now? QQQ around 719. VIX around 18. UUP right on 28. And oil holding near 128. Plus, we've got the noon Jackson Hole block, then the 12:30 goods trade, claims and inventories batch. Coming up, Mega Cap Watch, then back to the movers board, and later we've got BTCT candles.
Thanks, Macro Desk. Let's pull up AMZN and see if this mega cap is actually keeping up. Oof. First look, QQQ's up a full percent, SPY's green, breadth is mixed, and Amazon's down about 1.3%. So this is not leading the growth tape. This is the markets desk looking for the laggard tells, and right now AMZN is sitting near the bottom of today's daily candle. On the daily, this is pretty clean. Amazon had that higher zone earlier in the period, call it the upper 270s into 280. And since then, it's been lower highs, lower lows, and now a base trying to form. Not broken bad, but not exciting either. Current area is around 256.7, day high near 259.7, day low near 255.6. So 255.50 is the sanity check level for me. If that gives way, this base starts looking a lot less like digestion and a lot more like sellers pressing it. Upside, first real daily repair is 263. Above that, 265 gets interesting, and the 20-day area closer to 267 is where the bigger reclaim conversation starts. But today's volume on the daily read is light versus the old 40, 60, even 100 million share burst days. So don't pretend this is some massive conviction breakdown yet. It's weakness, yes, but it needs volume to confirm.
Thanks, Markets Desk. Breaking right now, NVIDIA shares are rising after the company signaled a longer AI spending runway. ProTerminal's newsroom is tracking blowout Q2 results here. Revenue doubled year over year, and the revenue outlook came in well above expectations. That's the hard fact. The market read is pretty clean too. QQQ is sitting around 719, up just over 1%, so this is landing into a tape that already wants growth leadership. What we don't know yet is how durable that spending pace is once the easy comparisons roll off. And we don't know how much of this gets competed away over time. But for today, the message from the tape is simple. AI CapEx is not hitting the brakes. The macro desk translation, the picks and shovels trade just got another oxygen tank. Expensive oxygen, obviously, because this is semis, not a yard sale. Next headline. CrowdStrike shares jumped about 8% pre-market after an earnings beat and a raised outlook. The company delivered what it called its strongest quarter ever, with AI-powered cybersecurity growth doing a lot of the heavy lifting. Why it matters: this is not just the chip side of AI anymore. Security software is telling you enterprises are still spending, and they're spending on tools tied to automation, threat detection, and defense. So when QQQ is firm at 719 and VIX is down around 18.3, that tells you investors are willing to pay for growth where the earnings story is actually showing up. Cybersecurity remains a crowded field, though. Great quarter, yes, but valuation still has to carry its own luggage through the airport. And then Salesforce. Shares jumped 11% after a Q2 beat, a higher full-year revenue and profit forecast, and a deeper AI partnership with Anthropic. That one matters because CRM is the enterprise software read-through. If NVIDIA is the infrastructure layer and CrowdStrike is security, Salesforce is the corporate workflow layer. Sales, service, data, automation, all the boring stuff that actually signs purchase orders. The key market takeaway is that AI is moving from story stock into budget line item. That does not mean every AI-linked name gets a free pass, and the market will still punish missed execution. But today's news flow is telling you the AI demand chain is broader than just one chip chart. Coming up, we'll flip back from the newsroom to the candles with BTCT on deck.
Thanks, Macro Desk. All right, Markets Desk back on the movers board. QQQ is still green by a little over 1%, VIX is lower, but breadth is mixed. So this board matters. This is where the real risk appetite is showing up. CEU still sitting on top, up about 174% at 2.41. PPCB right behind it, up about 150 at 2.67. VNRX still holding a big green number under 60 cents, up about 65%. Then we've got OKTG, MIMI, KXIN red, CRWL PUR, and WKSP down the page. Oof, look at the volume profiles here. Tiny floats, huge churn, and a lot of healthcare beta. So here at the Markets Desk, we're doing levels and volume. No victory laps. First chart up, CEU. Let's hit CELU first, because this is still the loudest print on the board. We're on the 1 minute. Board price is 2.4112, up 173.88%, with 95.2 million shares traded. Float listed at about 7.27 million. That's the whole story right there. The tape has churned more than 13 times the float. That can give you monster green candles, and it can also give you nasty trap wicks, fast. I'm not chasing the headline here. I'm watching acceptance. Above 2.50, clean psychological shelf. If buyers can actually hold that area, momentum stays alive. Below 2.25, that starts to look like supply winning, because a move this hot should not be coughing up chunks that fast if the bid is real. And keep the risk label front and center. Healthcare microcap. High dilution risk on the platform. Great tape to study, dangerous tape to marry. PPCB next. And this one's the classic biotech squeeze profile, right? We've got Propant at about 267 on the board, up roughly 150%. 72.9 million shares traded, and the float is tiny, about 1.25 million. So the question on the 1 minute isn't, is it up a lot? Obviously it is. The question is, does the tape still have control in the upper twos, or was that big volume burst the blow-off? For me, upper $2 behavior matters here. If dips toward the mid-260s keep getting bought, and it keeps holding above that low 250 area, bulls are still defending the squeeze. But if 250 starts failing, and the pops get sold right back into, then this turns into a churn and fade setup really fast. Also, same warning as the other tiny biotech names, high dilution risk on the board, so don't treat the percentage move like it's clean just because the chart is loud. Now, VNRX. This is a different kind of tape. Sub-dollar healthcare, massive churn, 277 million shares already, and it's sitting around 56 cents, up about 65%. So I'm not looking at this the same way as a clean breakout name. I'm asking, is it stabilizing in the mid-50s, or is it slowly bleeding back toward that half-dollar magnet? Because under $1, especially with this much volume, the tape can look strong for 5 minutes, and then just start leaking as liquidity thins out. If 55, 56 keeps holding and it can build higher lows, fine, that's stabilization. But if it starts living below 54 and can't reclaim, chat, that 50-cent area becomes the obvious magnet everyone's watching. And again, high dilution risk tagged here too, so levels matter way more than the headline percent gain. Mimi's the one I like using as the cleaner comparison here. Not saying clean isn't safe, it's still a tiny float name, but compared with CellU, PPCB, VNRX, this isn't the same biotech lottery tape. Mint Incorporation, Industrials, Interior Design, and Fit-Out Work. Board price 257, up about 43%, and the key stat is the float, about 1.38 million shares with 38.7 million traded. So yeah, that's the whole float turning over many times. On this 1 minute, I'm watching whether it can keep accepting above that 250 area, instead of just doing the one candle wonder and fading back into the prior base. If 250 keeps holding, that's where momentum traders keep paying attention. If it loses that and volume dries up, then it starts acting like the others. Big headline move, big churn, no follow-through. Now flip it. KXIN on the loser side, and this matters because the tape is not hostile today. QQQ's still up a little over 1%. SPY's green, VIX is lower. So if you're down 38% in that backdrop, that is real relative weakness. Board's got Kaishin Auto around 322. Volume only about 559,000. Relative volume just 1.9 times. Totally different energy from those 100 million share runners. So for me, this isn't a chase the volume story. This is, are sellers still pressing below that 325, 330 area, or does it finally stop bleeding and build a base? Until it actually reclaims something, the chart's telling you it's lagging a green market, and that's usually not the place traders rush to defend. Last one from the common stock side here, WKSP, pulling up the 1 minute now. This is Worksport, trading around 68 cents on the board, up about 34%, and the volume is the whole story. 146.7 million shares, 582 times relative volume. So yeah, sub-dollar momentum, tons of churn, and that high 60-cent area is the spot I'd keep staring at. If it can keep accepting above roughly 68, 69 cents, the momentum crowd stays involved. If it keeps rejecting there, then it's just another penny-name squeeze that can snap back fast. Float's about 14.4 million. Dilution risk is marked high. So don't confuse activity with safety here. This is a tape read name, not some clean investment story. And before we hand it off, quick product pass on the board. OKTG up almost 50%, CRMG up about 43, CRWL up 35, PUR up 34. Those are leveraged ETF products, so treat those moves differently than the biotech runners. They're built to magnify daily moves. They can decay, they can swing weird, and they're not the same thing as owning a regular stock. Alright, movers board covered. Coming up next, we're dropping into BTCT candles and reading that chart bar by bar. Alright, quick BTCT candle check. This one's all about the 1 minute tape. We start around 212, little early shove into 218, clean for a minute, and then oof, look at that wick. Sellers hit it hard down through 210, tagged near 205, and the volume popped over 120K on that drop. So right away, this wasn't a sleepy grind. This thing had two-way aggression from the open. Now, here's where the chart changes character. After that early flush, BTCT stops making fresh lows and starts building from roughly 210. Volume cools off, candles tighten up, and then around that minute 40 area, boom, buyers step back in. First push is 210 to 218 with volume over 180K, so that's the tell. Then the real expansion hits, 218 straight into 244, and the volume spikes are huge, 430K, almost 480K on the hottest candles. That's classic parabolic structure. Fast, exciting, but dangerous if you're late. Here at the markets desk, the live scoreboard is simple. Watch 235 above for acceptance back near the upper range, and watch 225 below if this post-spike base starts cracking. Right now, latest price is around 2.30, and the candles are trying to digest between about 2.30 and 2.33. Volume is lower than the blast-off candle. That's normal, but it's still elevated enough that I don't want to call this dead. The full day range is wide. Low near 2.03, high 2.44. So the middle of that range can chop people up. If 2.35 keeps rejecting, that's exhaustion risk. If buyers keep defending this 2.30 area and then 2.35 flips, okay, now the tape is proving something. No need to force it. Parabolic names punish impatience. Coming up, we'll swing back to the movers board and see what else is actually holding bid. Alright, let's snap back to the movers board and see what's actually leading this tape right now. QQQ's still firm, up a little over 1%. But look at this board. It's not clean megacap strength, it's healthcare squeezes and tiny float chaos. PPCB is still sitting on top, up about 170%, 74 million shares traded, 345 times relative volume. That is ridiculous churn versus a roughly 1.25 million share float. CELU is next, still monster volume, but oof, it's sitting around 2.20 now, so that earlier 2.25 failure marker is flashing. VNRX still green by 70%, MIMI holding a 43% move, and WNW sneaking onto the board with 169 times relative volume. Here at the markets desk, that's the group I care about first. Not the leveraged ETF noise yet, the real common stock tape. First chart up, PPCB. This is the cleanest headline number on the board, but also the most dangerous kind of chart. Tiny float biotech, huge relative volume, high dilution risk showing in the data, and the stock's already up 170%. So I'm not chasing the headline, I'm reading the tape. Price is around 289, so the round number fight is obvious, $3. If buyers can't get real acceptance over 3.00, this can still be a big green stock and be fading intraday. That's the trap. If it does reclaim 3.00, with volume expanding again, then the squeeze is still in control. Under 280, I'd say the character starts changing fast. Not a crash call, just the level where buyers stop looking aggressive and the chart starts looking tired. With a float this small and 74 million shares traded, every pullback can be violent. Halts, rug pulls, dilution headlines, all that stuff matters on names like this. CELU now. And this one's kind of the perfect example of why I don't love chasing the second push on these biotech names. It's still a monster on the day, up about 150%. Volumes over 108 million shares. Relative volume is just ridiculous, over 1,100 times normal. But the chart is all about that 2.25 area. It got there, failed to really own it, and now we're sitting just underneath at about 2.20. So for me, 2.25 is the scoreboard. If buyers reclaim that and actually hold above it, okay, maybe the momentum crowd tries to rebuild. But if it keeps rejecting under 2.25, this can bleed lower even while the headline percentage still looks insane. And yeah, high dilution risk on this one too, so don't treat the big green number like it means clean. Now, VNRX, totally different price zone, but same idea. This is a volume monster. We're talking 280 million shares traded, stocks around 58 cents, up about 71%. So chat, this is not sleepy. The level I care about here is that upper 50-cent bid area. Call it 57, 58 cents. If buyers keep rebuilding there, that tells you there's still demand underneath the move. If that area starts getting chewed through and every bounce stalls, then the tape changes from momentum to supply. Sub-dollar healthcare runners can look amazing for 10 minutes, and then just air pocket. So the read here is simple. Does VNRX hold the high 50s and base, or does it lose that shelf and turn into a fade? Mimi next. And honestly, this one's a little cleaner than the biotech chaos we just looked at. Still tiny, still a low float name, so don't get cute with it. But the tape is different. Stocks around 258, up 43%, about 39 million shares traded. And the float is only about 1.4 million. The key for me on this one is that 250 area. It's been trying to hold above that zone instead of doing the straight up, straight down squeeze candle thing. So if you're comparing it to PPCB or CELU, Mimi is less headline crazy, more of a trend hold so far. But yeah, small float industrial name, recent filings on the board, so this can still move violently if that 250 shelf cracks. Now, WNW. This one just slid onto the board, and this is where you've got to be really awake. It's up 34%, trading around 330, but the relative volume is the big flashing number, 169 times normal volume. That's not normal interest. That's the entire tape discovering it all at once. Floats listed around 1.2 million, and the dilution risk flag is high. So same deal. The chart can look great for 5 minutes, and then the supply side can smack it. On the 1 minute, I'm watching this 330 area. If it's holding above 330, buyers are still defending the move. If it starts living below that, especially with red volume coming in, then it's less breakout and more late chaser trap. Last pass here, KXIN is the odd one out, the lone red name on this board. We've got it down about 36%, trading around 335, and the volume is there, but it's not the same crazy panic volume profile as those biotech runners. Relative volume's about 2 times. So for me, the quick read is simple. 330 is the line. If it starts living below 330 again, sellers still own this thing. If it can actually reclaim and hold that 330s area, then maybe you get a tradable bounce attempt. But right now, this is not relative weakness you just ignore when QQQ is up more than 1%. And then before we wrap the board, these leveraged ETF names, OKTG, CRMG, CRWL, PUR. Don't confuse these with tiny common stock squeezes. OKTG is a 2x daily OKTA product. CRMG is 2x CRM, CRWL is 2x CRWD, PUR is tied to PURR. They're showing monster percentages because they're geared daily reset products, not because the ETF itself is some low-float biotech with a clean squeeze setup. OKTG up 50+, CRMG up 40+, CRWL and PUR both mid-30s. Fine, they're tradable instruments for active traders, but the risk is the structure. Daily leverage, tracking, resets, spreads, and they can move way faster than people expect. All right, movers board is set. Let's roll forward and hit the next piece of the tape.
Thanks, Markets Desk. All right, quick news brief from the macro desk, and we start with NVIDIA. ProTerminal is tracking NVIDIA higher after the company delivered strong earnings and an upbeat AI chip demand outlook stretching well into 2028. The market takeaway is pretty clean. Investors are still willing to pay for the AI runway when the numbers back it up. That matters because QQQ is sitting around 719 and change, leading the tape again. So this isn't just one chip stock doing a victory lap. It's the growth trade getting fresh oxygen. Next headline. U.S. regulators are considering another round of sweeping semiconductor tariffs. That's the other side of the AI coin, right? One headline says demand could stay hot for years. This one says the supply chain may get more expensive and more political. For NVDA, AMD, and INTC, the investor issue is margin pressure, sourcing, and who can absorb extra cost without breaking the model. This is still a consideration, not enacted policy, but semis trading at premium multiples do not love surprise friction. Nobody enjoys finding a toll booth on the AI superhighway. Salesforce is the other big corporate story. The stock surged about 12% pre-market after the company raised full-year revenue and profit guidance and expanded its AI partnership with Anthropic. Why it matters? This pulls the AI story out of the data center and into enterprise software. Chips are the picks and shovels, sure, but the software names have to prove customers will actually pay for the shiny AI buttons. CRM's guide-up says, at least for now, that spending conversation is still alive. Broadening it out, U.S. futures climbed after NVIDIA's print, and that risk-on tone carried into the cash session. SPY is around 771, QQQ around 719.5. VIX is lower, near 18.26. So the market is basically saying, give me growth, but don't ask me to love everything equally. Breadth is still mixed. Small caps are only modestly green, and that's the macro tell. This is not a full market parade. It's more like the AI float has music, and everyone else is checking if they were invited. Last one here. Canada's big banks beat earnings expectations, helped by a 35% jump in capital markets revenue. That matters beyond Canada because capital markets revenue is a read on deal flow, trading activity, underwriting, basically how much oxygen is coming back into the financial pipes. RY, TD, and BNS are the names tied to the story. The caution is credit risk still matters if the economy slows, but for today, the desk is seeing a healthier capital markets signal. Coming up, we'll flip back into the movers board and see which single names are actually wearing the headline risk well. All right, breaking from the ProTerminal newsroom. The software and chip bid is what's lifting the broader market right now. What we know? Strong earnings across tech, especially semis and enterprise software, are helping offset weakness elsewhere, and that's keeping growth buyers engaged. You can see it in the tape. QQQ is up about 1%, around 718.4. SPY is up 0.58%, near 770.5. And VIX is lower, at 18.27. What we do not know yet, and this matters, is whether this rally broadens out, because breadth is still mixed. So here at the macro desk, the read is pretty simple. Tech is carrying the backpack again, and the rest of the market is politely pretending in packed lunch. Next headline. NVIDIA jumped after a blowout earnings report and a stronger forward outlook. The fact pattern is straightforward. The company put up strong quarterly numbers, guided with confidence, and that reinforces the AI demand story in chips. Why it matters? NVIDIA is not just one stock anymore. It's basically the toll booth for a big chunk of AI infrastructure spending. When that toll booth says traffic is still heavy, the market marks up semis, AI suppliers, and anything even standing near a data center with a hard hat on. The caveat is valuation. Enthusiasm is one thing, paying for it is another. And then, Salesforce. The stock surged double digits after an earnings beat, a raised outlook, and an expanded AI partnership with Anthropic. That's the software side of the same story. Chips are the picks and shovels. Software is where investors want to see the AI spending turn into actual workflows and revenue. Why this matters for the market? It tells us the AI trade is trying to move from hardware only into enterprise adoption. And that's why the software names are getting a cleaner bid today. Still, the next checkpoint is execution. Partnerships are nice, but margins and bookings have to do the talking. Coming up, we've got earnings spotlight, so we'll keep this AI earnings chain front and center.
Thanks, Macro Desk. All right, Markets Desk is back on the movers board. Tape still has a bid. QQQ up about 1%, SPY up a little over 0.5%, but breadth is mixed, so this is not an everything is easy market. Up top, it's still volume event stuff. TPCB up 158%, CELU up 135%, VNRX up 75%. Oof. PPCB has 76.9 million shares traded, CELU 118.5 million, VNRX 284 million. That's not normal participation. That's crowd in the name participation. Then WKSP is still hanging around a 50% move. MIMI is holding green, and KXIN is the one red problem child on the board. We're going board first, then 1-minute charts. I want to see who's still building and who already flipped into a liquidity trap. Let's start with PPCB, because this is still the top headline on the board. Price is around 276, up 158%, and here's the scorecard. That 280 downside level we flagged just got hit. Good catch by the desk. But now the test changes. If PPCB can reclaim 280 and actually hold it on the 1 minute, buyers are trying to repair the fade. If it keeps rejecting under 280, then late momentum is getting trapped below that shelf. Volume is the whole story here. 76.9 million shares against a float around 1.25 million. So yeah, this tape can move fast both ways. I don't love chasing after a level breaks. I want to see whether 280 becomes resistance, or whether it gets reclaimed with real candles and volume. Next downside tape marker for me is 265 if this keeps leaking. Now, CELU is the next one I want on the 1 minute, because this is not a normal volume move. 1,228 times relative volume. That's insane. Price is sitting low twos, around 207, up about 135%. And the whole read for me is super simple. Does $2 turn into support, or do sellers keep leaning on every bounce? If this thing keeps basing above 200, okay, the bid is still alive. But if 200 cracks and it starts accepting under there, that's where these biotech squeezes can get ugly fast. 7.2 million float, high dilution risk on the board, so yeah, it can move, but it can also rug pull. I'm watching the 200 area first, not trying to be a hero in the middle of the candle. VNRX next, and I'm going quicker here because this is sub-dollar diagnostics, and the board already tells you it's pure volume chaos. 284 million shares traded, up about 75%, sitting right around 59 cents. The fight is basically upper 50s versus that 60-cent line. If 60 keeps rejecting, that tells you supply is still parked there. If it can actually reclaim and hold above 60, then maybe the tape gets cleaner for a little push. But don't overstay this kind of name. High dilution risk, tiny market cap, huge churn. These can look strong for 3 candles and then immediately wash. For me, upper 50s need to stay firm. Otherwise, the momentum crowd probably starts backing off. WKSP now. This one's interesting because it's not biotech, but the volume is still absolutely nuts. We're talking mid-70 cents, up about 50%, with 154 million shares traded, and relative volume over 600 times normal. So on this 1 minute, I'm not chasing the green candle. I'm checking the quality of the bid. Is it holding higher lows? Is it reclaiming quickly after flushes? Or are the pops getting sold faster and faster? That 75-cent area is the line I'd keep circling here. Above it, the tape still looks organized enough for momentum traders to care. Below it, especially if it starts chopping under VWAP, that's where sub-dollar names can get really sloppy really fast. Now, flip me to MIMI, because this is the cleaner looking one on the board versus those healthcare squeeze names. It's up 43%, trading around 2.58, and the float is tiny, about 1.38 million shares. So yeah, it can still move fast, but the personality is different. This is industrials, engineering, and construction, not a biotech headline shredder. What I want to see on the 1 minute is whether it's trending in steps, instead of just doing vertical wick, halt-style nonsense. If 2.50 keeps acting like support, and it can keep accepting above 2.60, that's a much cleaner momentum profile than a name that just spikes, rejects, and gives the whole move back in 2 candles. KXIN is the oddball on the board now, and honestly, this is why I don't want to only stare at green names. Market's got a bid, QQQ's up basically 1%, SPY is green, and KXIN is still down about 41% around 305. So relative weakness is the whole story. On the 1 minute, I'm not chasing a red candle here, I'm just checking. Does $3 actually hold, or does every little bounce get sold? If it loses 3 cleanly, that's the line where this can get sloppy again. If it starts reclaiming 310, 315, then okay, you might have a little mean reversion attempt. But right now, this is the lone red name for a reason. Alright, last pass before we hand it off. Quick leveraged ETF basket, because this is where the software, cyber, AI-adjacent risk-on trade is showing up on the movers board. Start with OKTG. This is not a normal single stock read. This is a 2x daily product, and it's up 53%, around $40 on about 30 times relative volume. So the chart read is simple. If it's still holding near the upper end of the 1 minute range, the underlying beta trade is still alive. Now CRNG, same deal. Leveraged wrapper, up about 40%, trading 944, and the volume's bigger here, over 6.5 million shares. You want to see whether it's stair-stepping or just doing one vertical candle and fading. Flip to CRWL, up 36%, around 79.74, but only about 2.7 times relative volume. So that one's moving, just not the same volume insanity as the tiny biotech runners. And PUR rounds it out, up about 35%, around 45.23. Again, chart only for me on these. Daily reset products can get weird fast, so I'm treating this as a read on high beta appetite, not a clean long-term story. That's the movers board, biotech chaos, one red breakdown name, and leveraged software strength. Coming up, we're shifting gears into the earnings spotlight.
Thanks, Markets Desk. Let's shift from the runners to an earnings name that's actually red on a green tech tape. Ubiquity, ticker UI. Pull this chart up, because this is the whole tension. SPY's up about 0.6, QQQ's up about 1%, VIX is lower, and UI is down a little over 2%, around the mid-580s. On the 1 minute, it tried the early push, got up through 595, even printed a day high around 602.50, and then, yeah, that bid just disappeared. The breakdown through 590 came with volume, and now it's basing down near 584, 585, with 582 sitting right underneath. So here at the company desk, before we even get into the release, the market is saying, good business, maybe good quarter, but not getting rewarded today. I'm watching 595 above as the failed breakout reclaim, and 582 below as the range crack. Now the earnings piece. UI is in the unscheduled earnings bucket today, but the actual company release in ProTerminal is dated August 21st, and this is the fourth quarter fiscal 2026 print. The headline numbers are big, revenue of $937.3 million, GAAP diluted EPS of 4.70, non-GAAP EPS of 4.73. The calendar estimate we have for UI EPS was 4.03, so on that comparison, earnings came in comfortably above. Full-year revenue was $3.3 billion. Full-year GAAP EPS was 15.85. That's not a tiny networking box story anymore. This is a serious high-margin hardware and networking platform. But the stock reaction today is still lower, and that's the part that matters. The question is not just were the numbers good. The question is what was already priced into this thing. Let's go one layer deeper, because this is where Ubiquity gets interesting. The 10K is filed, and the financial profile is pretty unusual for hardware. Trailing gross margin around 46%, operating margin around 36%, net margin about 29%. Revenue growth in the dataset is 18.7% year over year. EPS growth just under 30%. And the balance sheet improved a lot. Cash was $368.7 million at the last quarterly balance sheet we have. Total debt about $66.9 million. So net cash north of $300 million. That changes the story from can they fund growth to how durable is the demand and how much of this margin can hold. The flip side, this is a $35 billion market cap, roughly 44 times trailing EPS based on the profile, with a float listed a little over 4.2 million shares. So the equity can move fast, even though the company itself is large. Last layer, sentiment. Insider records here are mostly award, exempt, and in-kind tax-style entries. I'm not seeing a big clean open market buy or sell signal in the snippet we have. Analyst data is split too. BWS has maintained buy in the history, Barclays has maintained underweight, and there aren't fresh price targets in this set. So the read is pretty simple. UI just printed strong numbers, but the stock is acting like the bar was high. Back on the chart, 582 is the level I care about on the downside. If that gives way, the earnings fade has teeth. If it can reclaim 595, then today's sell-off starts looking more like a shakeout. Coming up, quick ProTerminal promo, and then we'll get back to the movers board. Thanks, Company Desk. Quick ProTerminal pit stop, because this is the stuff we're using all show. First up, Dilution Center. For the Markets Desk, this is huge on small cap runners. If a name's ripping and everybody's screaming momentum, I want to know. Shelf out there? ATM? Recent offering risk? That doesn't mean the chart can't move. It means you know what kind of tape you're dealing with. Research first, hype last. Now flip back to the movers board. This is the engine room. Top gainers, losers, price, relative volume, float when it's there, market cap, sector, all in one shot. And look, a mover is not a buy signal. It's a starting gun for research. If the tape's green, SPY up about 0.5%, QQQ up almost 1%, and some tiny name is up triple digits, that relative move matters. But you still check volume, structure, and risk before you get married to anything. Let's use CELU as the quick example. On the profile, I'm not just looking at the shiny percent move. I'm checking filings. Oof, this is where a lot of people get caught. Offerings, shelves, registration statements, those can change the risk profile fast. Then I'll peek insider activity too, not because one row tells the whole story, but because it gives context. And yeah, sometimes data can be delayed, incomplete, or just not there yet. Fine, say that. Don't pretend. That's the whole point of having the research stack open. And then, boom, right back to the 1-minute chart. This is where we keep score live. Candles, wicks, volume bursts, VWAP behavior, failed pushes, real demand versus just a headline pop. Everything you're seeing here, movers, charts, dilution, filings, insider trades, that's ProTerminal. It's built for self-directed research, not magic signals. If you want the same dashboard we're driving on the stream, go to proterminal.io. All right, coming up, we're getting right back into the movers board.
All right, Markets Desk is going right back to the movers board. Fresh scan, fresh tape. SY is still green, QQQ's up almost 0.9, but Brecht is mixed, so I care about what's actually pulling volume, not just what's green. Top of the board, CELU. Oof, 238 up 170%, 131 million shares, and relative volume over 1,300 times. That's the headline runner. Right behind it, PPCB still up 145. VNRX still hanging around the upper 50s after that earlier flush and reclaim battle. And then you've got the levered ETF stuff, OKTG, PER, CRMG, which we'll treat differently, not common stock squeeze setups. I'm going to prioritize the actual single name momentum here. CELU first, then PPCB, then VNRX, then we'll check the cleaner industrials and the lone red name. Let's pull CELU now. 1-minute chart. This is the one with the ridiculous tape. 238 last print in the data. Up 170%. 131.6 million shares traded against a 96,000 share average. That's not a typo. Float showing about 7.3 million. So yeah, this can move fast both ways. The earlier CELU level at 225 already hit to the upside. So here at the Markets Desk, I'm resetting the live scoreboard. 240 is the acceptance line above. I want to see if buyers can actually live over that area, not just poke it and reject. Below, 225 is still the danger line for me. Lose that after this kind of extension, and the momentum crowd can get very jumpy. Also, dilution risk is flagged high in the platform data, so this is exactly the type of biotech runner where the chart can look amazing for 5 minutes and then get nasty. Fast name, respect the levels. PPCB next. And yeah, this one is exactly why you keep the chart up, not just the percent gain column. ProPant is at 2.63 on the board, up about 146%, almost 78.7 million shares traded. and the float listed is only about 1.25 million. So when it moves, it can move stupid fast both ways. The level I care about on this one is 2.80. If bulls can reclaim 2.80 and actually hold above it, then you've got the squeeze trying to reorganize. But right now, with it sitting under that area, this is more of a fade pressure read than a clean breakout. Biotech, tiny float, high dilution risk flag, so I'm not treating the green number like it's automatically healthy. I want to see whether buyers step back in before 2.80 or if every pop just gets sold into that level. Now VNRX. Pull that one up, because this is a totally different kind of tape. Sub-dollar name, 56.6 cents on the board, up nearly 67%. But look at the share count traded, 288.7 million shares. That's a monster liquidity event for this thing. The open call out here was basically the 60-cent battle, and so far it has not cleanly owned that level. It's still fighting in the upper 50s, and that's the whole trade read. Can it accept back near 60? Or does 60 become the ceiling and the mid-50s start to crack? Medical diagnostics name, high dilution risk flag as well. So same idea. Respect the volume, but don't fall in love with the percent move. Under $1, these candles can look amazing for 3 minutes and then get nasty real quick.
Thanks, Markets Desk. Breaking macro headline here. Oil hit a one-week low after investors downplayed the impact of new U.S. sanctions on Iran. Here's what we know. The sanctions are on the tape, but crude did not get the classic panic bid you'd expect from a supply risk headline. The market is basically saying, show me the disruption, not pay any price. What we don't know yet is enforcement, actual barrels affected, and whether this turns into a shipping or supply problem. Big difference. For investors, the read-through is inflation first. Softer crude takes a little heat off input costs, transport costs, and the consumer wallet. Live cross-asset snapshot is a little messy. Our oil proxy is sitting around 127.97, up about 0.5% on the session. So this is not some clean straight-line collapse. But the headline matters because the market is treating geopolitical risk like a smoke alarm with a low battery. Annoying, worth checking, but not evacuating yet. Next one from ProTerminal's macro stack. Bonds are wobbling as the market pushes the Fed to act, with inflation confidence fading a bit. That's the headline. What happened is yields have been moving around as traders reassess policy, growth, and inflation all at once. Always fun when the bond market decides to become the group chat. The key thing here, it's not a full bond tantrum on the screen. TLT is basically flat, around 83.26. Off 5 basis points in ETF terms. And IEF is near 93.31, barely changed. So the message isn't panic, it's tension. Why it matters. Every growth stock multiple, every mortgage-sensitive name, every bank book, all of it is still chained to the rates tape. Here at the macro desk, bonds are still the bouncer at the door. Equities can party, but yields decide how loud the music gets. Third headline, investors poured $56 billion into gold and Bitcoin ETFs last week. That is a monster flow number, and it tells you people are not just buying risk, they're buying insurance alongside it. Gold is a little softer on our cross-asset board, around 420.80, down a touch, but the crypto-linked names are hot. BITO up about 2.8%, Coin up 5.3%, MSTR up more than 11%. So the barbell is alive. QQQ green, VIX lower, and at the same time, money is going into hard asset and crypto hedges. Very 2026. Seatbelt on, foot on the gas. Quick caution on the Bitcoin side. Crypto is still highly volatile and largely unregulated, so those ETF flows don't magically make it sleepy. Coming up, we've got a CISS ticker deep dive, back from macro clouds to one chart on the desk.
Thanks, Macro Desk. Let's pull up Tesla and go daily first. All right, TSLA on the big chart here. And yeah, it's green today, up a little over 2%. So it's outperforming a QQQ tape that's up about 0.8. But don't miss the bigger structure. This thing is still in repair mode. You've got the old high area up near 450, then lower highs, then that ugly breakdown through the 370 zone, and now we're bouncing back into the mid 350s. So the move is good today. The chart is better than it was at the lows, but it's not clean leadership yet. Here's the key on the daily. 365 to 370 is the wall. That was prior support, now it's resistance until proven otherwise. Tesla's around 353 on the quote. The daily candle package has current action around that 351 to 353 pocket. And that lines up with the chart just trying to build a base. Above 365, okay, then the tape starts to look like it's reclaiming damage. Below the 20-day area, roughly 337, that bounce starts looking way less convincing. And remember, this is a $1 trillion+ name trading at a pretty rich multiple, so it doesn't get a free pass. It needs volume to confirm. Right now, the recent recovery is happening on lighter volume than the big sell-off candle. Now, let's drop down to the 1 minute, because this is where the tape gets interesting. Oof, look at that wick into the high. TSLA based early around 351 to 352, pushed off 352.70, and then ripped right into 354.93 with the volume spike. That's the real intraday thrust. But then, classic midday, it fades back toward the breakout zone. So this is not a clean trend day anymore. It's a breakout, then a retest. I'm watching 354.93 above as the high of day reclaim spot, and 351.50 below as the line where the base starts to crack. Between those, Chop City. So, scorecard on Tesla. Relative strength versus the market? Yes. Bigger picture leadership? Not yet. Daily needs 365 to 370. Intraday needs that 354.93 high to matter again. Otherwise, it's just a mid-range bounce with buyers defending 351.50. Here at the markets desk, I don't need to marry the story. I need the level, the volume, and the reaction. Coming up, we've got that CISS deep dive, so we'll flip from mega-cap structure into something much more tactical. All right, let's flip from TSLA into a nasty little small-cap tape, CISS. This is C3IS, Marine Shipping. And oof, market's green, QQQ up almost 0.8, but this thing is still down about 29%. Volume's the story. Over 10 million shares versus an average under 900,000. And the float? Tiny. About 274,000 shares. So yeah, this can move fast. Both ways. Look at the 1 minute structure here. It opened around 251, gave you that quick little push toward 255, and then bang, straight air pocket down to 196. That wasn't a soft fade. That was volume confirmed selling, with one of those heavy early bars doing more than 250,000 shares. Then the character changes. It bases around 210 to 215, starts building higher lows, and now it's pressing into 225, 227. But watch the wicks. Right there, small upper wicks into resistance. That's hesitation. So for the markets desk, the scoreboard is clean. Above 227, the recovery attempt gets more believable. Below 210, that base starts cracking, and this thing can get sloppy again. Current tape is around 224, so it's right at the decision zone, not in the middle of nowhere. Now, catalyst, check. This isn't moving in a vacuum. On the news tab, CIS had a 6:30 a.m. release today, second quarter and 6 months 2026 financial and operating results. They also told the market back on August 24th that the release was coming, so traders were ready for a print. What matters on the tape is the reaction. Sell first, hard, then a tiny float rebound off the lows. That's why I don't want to marry the headline here. For a name like this, the candle action has to prove the demand is real, especially when the first move after the news was straight down. And here's the part you have to respect: dilution. ProTerminal flags CISS as high dilution risk. Active shelf, active equity line, 13 active shelves, 109 total offerings, and roughly $31.8 million listed as total raisable amount. Against a market cap around 573,000, that is a monster overhang. So yes, the float is tiny, and yes, tiny floats can squeeze like crazy intraday. But they can also ruck people fast when supply shows up or the bid disappears. My levels are simple. 2.27 above is the prove it reclaim, 2.10 below is the danger line, and the 1.96 flush low is the last reference from this morning. All right, Let's flip from the tiny float chaos to NFLX. Big cap name, clean chart read, and this one is not acting like QQQ today. QQQ's up about 0.8, SPY's green, VIX is lower, and Netflix is red by a little over 2%. So here at the markets desk, that's the first note. This is a laggard on a friendly tape. Daily chart first. Oof, look at the structure. This is not the clean leader look. You've got the prior slide from the mid-90s down toward that low 70s area, and now it's basically trying to build a base instead of actually leading. Current area is around 79 and change, so it's sitting in the middle of the box. The big daily resistance is that 82.45, call it 82 to 83 zone. That's where the bounce has to prove it's more than just a reflex move. Underneath, the major base support is around 70.90. The important thing, the sell-off had the big volume. The bounce has been lighter. So yeah, it can repair, but it has not earned leader status yet. Let's drop down to the 1 minute. Now this is the midday tape. Tight, choppy, not a trend day. Open was around 79.70. It flushed to 79.31, then bounced back towards 79.90s. So the micro range is super clear. Above 79.96, that's the high of day reclaim. Below 79.31, that's the low of day failure line. Right now it's hovering back near the open, around 79.70-ish, which tells you buyers defended the low, but they haven't taken control. Volume did show up on the sell pressure near the low, and then you got some support volume on the bounce. But no clean expansion yet. This is range traffic, not a breakout tape. So, scorecard on NFLX. Daily chart is still in repair mode, intraday chart is boxed in, and relative strength is weak versus a green mega cap tape. I'm not forcing a story here. For me, the market is telling you the clean read is 82.45 above for daily range acceptance, 79.96 above for the intraday push, and 79.31 below if this little base starts cracking. Also, heads up, we're 9-ish minutes from that noon Jackson Hole slot, so tape can get jumpy. Coming up, we'll hit the news intermission and see what headlines are actually moving this market.
Thanks, Markets Desk. Quick news brief, and we start with NVIDIA. Headline here, NVIDIA delivered a blowout Q2 earnings beat and strong Q3 guidance, and that lit the match under chips and AI again. What happened is pretty simple. Demand for AI infrastructure is still showing up in the numbers, not just in slide decks. Why it matters? When the AI bellwether confirms demand, the whole semiconductor complex gets permission to reprice. QQQ sitting around 718.5, up about 1%, tells you the market is treating this as a growth stock tailwind, even if valuation is still the elephant in the server room. Next headline. AI and chip stocks rallied as treasury yields and oil prices declined, giving equities that classic lower pressure backdrop. The reason traders care is discount rate math. Lower yields make long-duration growth stories easier to sponsor, and softer energy can take a little heat out of the inflation conversation. SPY's up around 770.6, QQQ's leading, and VIX is down at 18.25. So the tape is saying, okay, breathe a little. Here at the macro desk, we call that less drama, not no drama. Big difference. Third story. Apple just posted its best June quarter ever, while Microsoft locked up $678 billion in contracted backlog. That's the consumer side and the enterprise side both showing muscle at the same time. For investors, the key is that this isn't only an NVIDIA market if Apple demand is holding, and Microsoft has that kind of long-duration contract pipeline. Backlog is not cash in the drawer today. Let's not get carried away. But it is visibility, and this market is paying up for visibility. Fourth headline. Canada's big banks topped earnings estimates, helped by a 35% surge in capital markets activity. So for names like RY, TD, and BNS, the driver wasn't just plain vanilla banking. It was deal-making, trading, and capital markets revenue. Why it matters? Banks are a read on animal spirits. If capital markets are waking up, that can say something about risk appetite. The catch, because there's always a catch, is that trading revenue can be jumpy. It's not exactly a metronome. Last one for the brief. Global bond markets steadied as investors weighed U.S. Treasury buybacks and the Iran sanctions backdrop. That matters because bonds are the floorboards under this whole equity rally. If they start creaking, everything upstairs gets nervous. Right now, TLT is basically flat near 83.26. IEF is near 93.33. The dollar proxy is a touch lower around 28, and gold is only modestly green around 421.8. So the message is not panic hedge, it's selective risk on. You can see that in crypto-linked equities too, with Coin and MSTR firm, though those are always high volatility animals. Coming up, quick pro terminal hit, then we'll kick it back toward the movers board.
Thanks, Macro Desk. Quick pro terminal pit stop, then we're right back into the tape. Here at the markets desk, this is the first screen I want when small caps start going crazy. The dilution center. Not sexy, super useful. Shelves, ATMs, offerings. That stuff can change the whole risk profile when a name is ripping. We're not using it as a buy or sell button. It's context. Risk first, chart second. Now, flip to the movers board. This is the scanner brain. PPCB is still sitting at the top, up about 146%. Relative volume over 370 times. That is monster attention. SELU is still huge too. VNRX still elevated. But look, the board is not a signal. It's triage. It tells you where the crowd is, where volume is abnormal, and which charts deserve the next 30 seconds of work. That's it. No hype, just sort the chaos.
Thanks, Markets Desk. All right, top of the hour reset here at the macro desk. It's 12 p.m. Eastern, and the tape is still leaning risk on, but it's not exactly a confetti cannon. SPY's at 770.64, up 0.6%. QQQ is the leader at 718.69, up just over 1%. No surprise, NASDAQ is still the market's mood ring. IWM's green too, 321, up about 0.4. So small caps are participating, just not driving the bus. VIX is down to 1823, off 1.7%. And Brent is mixed. That's the little wrinkle. Indexes look good, but under the hood, it's more selective than euphoric. The big story is pretty simple. Jackson Hole is on the marquee. Bonds are behaving. And when bonds behave, growth stocks get a little more oxygen. TLT is basically flat at 83.27. IEF flat around 93.32. Not a bond tantrum, more like the bond market sitting quietly in the corner, which frankly is all equities wanted. Dollar's a touch softer at 28. Yen proxies basically flat at 57.54. Gold's up a modest 0.28% to 422.50. Oil's firmer by 0.68% to 128.22. And crypto risk is loud. BITO up 2.5%, Coin up 6%, MSTR up nearly 12%. What I'm watching next? QQQ's 719.5 area, VIX around 18.23, and that 1230 macro batch, trade balance, claims, inventories. Coming up, we've got a market mover scan, and later, we'll drill into PPCB candles.
Thanks, Macro Desk. All right, Markets Desk is going straight to the movers board. Look at this tape. SPY green, QQQ up a full %, VIX leaking, but Brent is still mixed. So I care a lot about what's actually getting bid. Top of the board is wild again. PPCB up about 143%, 80 million shares, 371 times relative volume. That is not normal volume. CEU right behind it, up 127%. And that relative volume number is basically nuclear, almost 1,500 times. Then flip side, SMJF down 84%, total air pocket. VNRX up 72, OKTG up 56. So yeah, the board is not sleepy. This is midday, but these are opening bell style moves. PPCB first, because if you're top of board by that much, we've got to check the tape. We used this name earlier as a platform example. Now I only care about trade quality. PPCB is sitting around 260, up 143%. 80 million shares traded, and the float is only about 1.25 million. That's match-head stuff. It can squeeze hard, and it can rug hard. High dilution risk is tagged too, so I'm not treating every green candle like clean accumulation. The line I'm watching right now is 260. Above 260, the Momo crowd is still defending the move. Back under 260, especially if the 1 minute starts printing repeated upper wicks, then oof, that starts looking less like a clean push and more like distribution into volume. No chasing from the markets desk here. CLU next, and this is the one where the volume number is just ridiculous. We're talking about cellularity, biotech, around $2, up about 127%. And look at the board stat, 144 million shares, almost 1,500 times its average volume. That's not a quiet move, that's the whole room piling into one ticker. But here's the actual check on the 1 minute. Is the bid still living above that main intraday base, or are we starting to see lower highs and failed reclaims? $2 is the easy psychological line right here. Above that area, the momentum crowd can still argue it's holding together. If it starts living below 2 and every pop gets slapped, then the board percentage is old news and the tape is telling you it's fading. Also, same small biotech rule applies. High dilution risk on the profile, so I'm reading the candles, not marrying the story.
Thanks, Markets Desk. Quick wide-angle check, because this tape is green, but it's not exactly a victory parade. SPY's at 770.81, up 0.62%. QQQ is 719.11, up 1.09. IWM 300.245, up 0.44. And VIX is down at 18.22, off 1.73%. So the risk thermostat is lower, but breadth is still mixed. That's the little asterisk on the party invite. The story here at the macro desk is pretty simple. NASDAQ is leading, small caps are participating, but the whole market is not marching in perfect formation. That's usually a tape where liquidity and rates are letting growth breathe, but stock selection still matters. If the index move were a buffet, QQQ got the steak, IWM got a decent side dish, and Brett is still standing there asking who ordered the salad. Now, the reason equities can hold that bid is the cross-asset stuff is not yelling at them. We don't have a live 10-year yield line on this card, so use the bond ETFs as the read-through. TLT is 83.265, basically flat, down 0.04%. IEF is 93.3201, flat on the day. That's not a rate tantrum. It's more like the bond market muttering under its breath. Dollar proxy at 28, down 0.07. Yen proxy 57.54, off 0.02. So FX is quiet, not a wrecking ball. Then commodities are firm. Gold 422.50, up 0.28, and oil 128.215, up 0.68. That's the one I keep an eye on. Equities can tolerate firm oil while vol is falling. But if oil turns into an inflation headline again, that's when the macro desk starts side-eyeing the screen. And crypto beta is definitely awake. BITO up 2.5%, coin up just over 6, MSTR up almost 12. Treat that as a risk appetite flare, not a treasure map. Crypto is volatile, lightly regulated, and occasionally behaves like a raccoon in a fireworks store.
Thanks, Macro Desk. Let's get right back onto PPCB, because this one's still the noisy chart on the board. We're on the 1 minute. And look, this is not a clean trend. Day high up near 294, day low down at 2.57, opened around 2.83, and now it's living mid-range around 2.65. So yeah, big percentage mover, green market behind it, but the candles are telling you buyers and sellers are still wrestling here. Oof, look at that wick zone. The real burst came when PPCB pushed from around 2.69 up toward 2.86, and volume kicked hard, over 560,000 shares on that spike. That's real participation. But here's the problem. It didn't hold. It rejected back into the mid-270s, then bled back toward the 2.60 area. So the tape gave you demand, then immediately gave you supply. That's why I'm not calling this a clean breakout. It's a range. Wide, violent, tradery range. The important lower band is 2.57 to 2.60. If that cracks, the base is failing. The upper line is 2.86. If it can reclaim that with volume, then the chart changes tone. Until then,
Thanks, Markets Desk. Quick vol check. While the Nasdaq is still wearing the cape, VIX is sitting right around 1821, down about 1.8%. And that matters because QQQ is still green at about 719, up a little over 1%. So this is not a panic vol tape. This is more like the market bought the insurance, checked the weather, and decided maybe the roof is still attached. But here at the macro desk, I'm watching that 1823 area on VIX. We flagged it earlier, because if vol pops back above there, while QQQ stalls under 719.5, that's your first little tell that the afternoon bid is getting less comfortable. Breadth is still mixed, so don't confuse a lower VIX with everything being healthy. It just means index level fear is not the driver right now. Now pull up NVDA, because this is where the vol conversation actually gets interesting. Stocks around 226.7, up about 8.1%, and the 1-minute chart has been clean. Early dip into roughly 223.80, reclaim, base around 224 to 225. Then the real volume shows up through 225 and again near 227. That's classic post-event repricing. Earnings are out, the guidance story is known, and now the tape is deciding how much of that move it wants to keep. I'm not talking specific option strikes here. We don't have that chain on screen. But just conceptually, when VIX is lower and NVDA is still ripping, that's single name event energy, not broad market fear. The level is simple for the chart people. 227 is the lid right now. 225 is the support that buyers defended. Above 227, momentum is still in control. Below 225, you've got the first sign the post-earnings chase is cooling off.
thanks, macro desk. Let's put JPM on the big board and see if the banks are actually confirming this risk on tape. QQQ's up a full percent, SPY's green, VIX is lower, and JPM is red about 0.4, sitting around 354.9. So right away, this is not your upside leader. Daily chart first. Last 90 days, this thing pushed from around 300 to the 366 area, and now it's pausing. That matters. Tech has the bid, JPM is doing the sideways under resistance thing. Here's the daily scorecard. Structure is still fine. Higher highs, higher lows in the back half of the chart, and the bigger volume pushes mattered. You had one push around the 310 to 320 zone with volume north of 10 million. Then the bigger acceleration from roughly 335 toward 350 with volume closer to 20 million. That's real institutional participation. But now, oof, you can see the stall. Latest candles are lighter. Price is just under that 20-day area around 358. RSI is neutral. ADX is low. So the trend is up, but the punch has cooled off. The market's desk levels are simple. Watch 350 as the daily floor. Watch 358-ish as the short-term reclaim. And 366 to 366.5 is the big lid from the recent high.
Thanks, Markets Desk. Quick macro positioning check before claims hits at 12:30. All right, here at the macro desk, the setup is pretty clean. Equities are leaning risk on, but not exactly doing cartwheels. SPY's around 770.53, up 0.58%. QQQ is the leader at 718.45, up about 1%. And the Russell's participating but quieter. IWM 299.90, up 0.32%. So tech has the steering wheel. Small caps are in the back seat asking if we're there yet. VIX is 18.22, down 1.73%. So the market's not bracing like this is a meteor strike. The claims cluster is the thing now. Scheduled for 12:30, roughly 18 minutes out. What we've got on the board, jobless claims 4-week average estimate, around 203K. Continuing claims estimate around 1.790 million. plus goods trade balance and inventories. The key is not just the number, it's whether bonds, dollar, and NASDAQ all tell the same story after it drops. And that's the cross-asset tell right now. Bonds are calmish, not heroic. TLT is 83.215, down 0.10%. IEF basically flat at 93.305. That says rates are not currently punching growth stocks in the face, which helps explain why QQQ is leading. Dollar ETFs 27.99, down 0.11%. Yen proxies basically flat at 57.545. So FX is not screaming stress either. Meanwhile, gold is firm. GLD 422.83, up 0.36%, and oil's got a bid too. USO 128.485, up 0.89%. So commodities are saying, hey, don't forget the real world stuff. Crypto beta is the loud kid at lunch again. BITO up 2.6%, coin up nearly 6%, MSTR up 12%. Into the claims print, my board is simple. QQQ 719.6 is the upside pressure point. 717.3 is the intraday support line. VIX over 18.5 would tell me the market's getting twitchy. And UUP reclaiming 28 would mean the dollar's starting to matter again. First reaction can be noisy. The second cross-asset reaction is usually where the truth starts showing up.
Thanks, Macro Desk. Quick pit stop on the toolkit, because this is the stuff we're driving with all show. This movers board right here, this is ProTerminal. Top gainers, top losers, price, relative volume, float context when it's there, all in one shot. And key point, this is research fuel, not a buy button. Market's green, QQQ's leading, but mixed breadth means you still need to know what's actually moving and why. Now, oof. This page matters a ton on the small cap stuff. Dilution center. If a runner is up huge, the market's desk is immediately asking, any shelf? Any ATM? Any offering risk? Because a chart can look spicy for 10 minutes, and then one filing changes the whole conversation. This doesn't magically predict anything. It just puts the risk on screen fast, so you're not flying blind when the tape gets stupid. Let's use CELU as the example, since it's been on the board today. First up, filings. I want the receipts. Recent SEC docs, shelves, prospectuses, anything that explains capital structure risk. That's where you look. Then insider trades, not because insiders are magic, but because it's another clue in the research stack. And then news, press releases, company updates, fresh headlines, that's the catalyst check. Price action tells you what traders are doing. These tabs help you understand what they may be reacting to. Data can be incomplete or delayed in spots, so you still treat it like a live research workflow. And then we go right back to the 1-minute chart, because this is where the lie detector lives. Big headline? Cool. Big percentage move? Cool. But where did volume actually hit? Did bids hold after the push? Are we seeing clean candles or nasty upper wicks? That's why we keep flipping between the board, the filings, the dilution page, and the chart. Everything you're seeing on the stream is ProTerminal. Educational only, obviously. You make your own calls, but if you want this set up on your own screen, sign up at proterminal.io. Coming up, we're back to the mover stand.
All right, let's hit the movers board. Fast scan, no fluff. QQQ's up about 1%, SPY's green, VIX is lower, and then this board is just pure small cap chaos. PPCB still sitting top of the board, up about 148% at 265, 81 million shares traded, monster relative volume. We already mapped that range here at the markets desk, so I'm not re-chewing the same chart for 5 minutes. The fresh one I want next is CELU, up 110%, 149 million shares, relative volume over 1,500. That's not normal. That's a stock yelling at you. And then look at the other side. SMJF down almost 87. KXIN down 52. Oof. Big green, big red, same board. This is why we go chart by chart. Okay, CELU first, pulling up the 1 minute. This thing is up 110% at 185, but the real headline is the liquidity. 149 million shares versus an average under 100,000. That is insane relative volume. Float is about 7.3 million. So yeah, when volume gets this stupid, the chart can move violently both ways. Healthcare biotech high dilution risk showing in the data, so I'm not treating this like a clean large cap breakout. This is momentum tape. The line I'm watching right here is 180. If CELU keeps defending 180, the squeeze crowd stays interested. If it starts living below 180, the move gets way sloppier. And then $2 is the obvious magnet above, not magic, just a round number battle, where traders start leaning on the bid and offer. Market's green, sure, but this is not QQQ beta. PPCB now, quick score check. Not gonna relitigate the whole setup. This is still the top percentage gainer on the board, up about 148% at 265, and the volume is nuts. 81 million shares versus a normal day around 215,000. So yeah, the tape is awake. But on the 1 minute, what I care about now is whether this range keeps tightening or if it starts leaking back through the middle. Tiny float, biotech, high dilution risk showing in the data. So the move can be real and still be nasty. If it can't reclaim that upper band near 275, I don't want to call that clean momentum. That's just chop with a huge headline move already baked into the candle. Now, Mimi, because this is the one where that 270 level mattered earlier. And there it is, we did get the hit. The follow-through question is the whole trade now. Is 270 support, or was that just a fake out above the line? Current board price is around 273, so it's basically sitting right on the battlefield. If buyers keep defending above 270, that's constructive, especially with 41 million shares already traded on a 1.38 million float. But if it starts closing 1 minute candles back under 270 and volume dries up, then the breakout turns into a trap pretty fast. Good move, good liquidity, but it needs to hold the level it just won. SMJF now. And yeah, this is the ugly side of the board. Market's green, QQQ's up about 1%, and this thing is still down almost 87% at $1.49. That's not just weakness, that's a full unwind. Volume's about 2.7 million, relative volume around 3.7, so it's active, but not the same insane liquidity we saw in CELU or PPCB. The dead cat bounce test is super simple here. Can it reclaim that 150 area and actually hold it, or does every push just get sold into? Under 150, I'm treating pops as suspect. Above 150 with cleaner volume, okay, then maybe you can talk stabilization. But right now, scoreboard says unwind first, bounce second. KXIN next. Another loser, down over 52%, sitting right around 247. This is why I care about the 250 line. It's not magic, it's just the obvious psychological pivot. Reclaim 250 and hold it. The tape can at least try to calm down. Stay below it, and it's still trading like pressure is in control. Volume's about 779,000. Relative volume 2.6. So again, active, but not monster volume mania. And keep the risk profile in mind on this one. The board flags high dilution risk, so for a beaten down small cap like this, I'm not just asking, is it cheap? I'm asking, is there real demand, or is this just a bounce inside a broken tape? Last common stock name I want to hit is GSUN. Pulling up the 1 minute now. Golden Sun Education, sitting around 39 cents, up about 46%, and the volume is the whole story. 5.5 million shares versus roughly 214,000 average, so about 26 times relative volume. It's not subdime, right? We're not talking a 2-cent stock here, but it is still penny stock territory, so those wicks and spreads matter. For me, 40 cents is the obvious line on the screen. If it can actually build above 40, that shows buyers are still hanging around. If it starts living back below 38 cents, that momentum look gets a lot messier. Now quick speed round on the weird part of the board. CRMG, PUR, and OKTG. These are leveraged single name ETFs, so totally different animal from CELU or PPCB. CRMG is the 2x CRM daily ETF. PUR is targeting 2x exposure tied to PURR, and OKTG is the 2x OKTA daily ETF. So when you see OKTG up 54%, CRMG up 38%, PUR up almost 40%, don't go hunting for a normal company press release inside the ETF. It's amplified daily exposure, resets, path dependency, liquidity, all that fun stuff. Great to know what they are, but keep them in their own bucket. All right, that's the movers board. Next, we'll flip off the runners and get into the next live hit. All right, let's pull up OMH and just read the candles. First thing, this is a 7.8-cent stock, sub-dime. So yeah, we can analyze the tape, but anything under 10 cents can get delisted at any time, and it's not something I'd recommend for day trading. Now the chart. Ugly open, lower highs, lower lows, and the first real tell was losing that 0.081 area. Oof, look at that sell pressure. This wasn't a slow bleed with no volume. The volume actually confirmed a break. OMH opens around 0.08175, tags up near 0.0824. Then once 0.081 cracks, sellers press it. The clean support now is 0.078, because that's the day low, and that's where the candles started trying to base. But right here at the market's desk, I don't love calling this a reversal yet. The bounce attempt towards 0.0795, maybe 0.08, is happening on lighter volume than the dump. That matters. Heavy volume down, lighter volume up. That's usually a pause, not proof the buyers took control. So the scorecard is simple. Below 0.078, the base fails. Above 0.08, at least you've got a little reclaim attempt. Bigger resistance is still that 0.0818 to 0.082 zone where the breakdown started.
Thanks, Markets Desk. Breaking across ProTerminal right now, headline is NVIDIA shares surge as strong AI-driven demand fuels blockbuster earnings. What we know. NVIDIA reported quarterly revenue that more than doubled year over year, driven by heavy demand for AI chips, and the stock is reacting hard to the upside. What we don't know yet from this first read is the durability of that demand curve, how much is repeatable, how much is pull forward, and how the broader AI supply chain shares in the economics. Market read, QQQ is around 718.3, up just under 1%. VIX is near 1822 and lower, so this is not a panic tape. This is event repricing with the AI bell cow pulling the sled. Dollar's a little softer around $27.99. TLT is basically flat near 83.21. Gold and oil are firm. So yeah, AI bulls got coffee, macro tourists got another spreadsheet migraine. Next big one, Wendy's stock plunges over 14% after the take private bid gets shelved. The fact pattern here is pretty simple. The private equity-backed buyout plan has been indefinitely paused, and the stock is losing that deal premium cushion in real time. Why it matters? When a name is trading with takeover hope baked in, and that hope gets pulled, investors have to reprice the standalone business again. That hits Wendy's directly, but it also matters for the broader M&A tape. Financing is not free. Rates still matter. And apparently spreadsheets still outrank vibes. Annoying, but true. Third headline, Meta emerges unscathed from a major U.S. legal battle. ProTerminal's newsroom is tracking that Meta's largest U.S. legal challenge has been resolved with the core business intact, which removes a big uncertainty overhang from the stock. Why investors care? Once the legal fog lifts, the conversation shifts back to ad growth, AI spend, margins, and whether mega-cap tech keeps carrying the index. And with SPY around 770.6 and QQQ still near 718.3, while breadth is mixed, these mega-cap clarity stories matter. The index can look clean even when the average stock is doing push-ups in the mud. Coming up, we'll flip from the macro board back into small-cap momentum and see where the actual heat is.
Thanks, Macro Desk. Quick OMH deep dive, because this is pure edge of the cliff tape. We're on the 1 minute. OMH is around 7.9 cents. Yep, a sub-dime stock. And I have to say this clean, anything under 10 cents can get delisted at any moment. And this is not something I'd recommend for day trading. We're reading structure, not pumping it. Market's green, QQQ's up almost 1%. And OMH is down 18%, so that relative weakness matters. Oof, look at that wick action. Early sell volume hit from about 0.0818 down into 0.0792. Then the bounce attempts got lighter. Right now it's basing near 0.0786. That 0.078 low is the line. Lose that and the base cracks. First reclaim I care about is 0.0805, not a victory lap, just where sellers start having to answer. Now flip the news. The headline this morning is a share consolidation. That's the catalyst bucket. Then you've got the July registered direct offering and the prior NASDAQ minimum bid deficiency notice sitting in the background. So this isn't just candles in a vacuum. The stock is trading like a compliance and supply story. And the dilution center is ugly. ProTerminal flags high dilution risk, active shelf, active equity line, 14 offerings counted, about 9.36 million raised over the last 12 months. That's why here at the markets desk, I don't chase random green candles in names like this. Volume is huge, over 20 million shares versus an 80K average, but the bid still has to prove it. If it can't hold 0.078, pressure stays in control. If it reclaims 0.0805 with actual volume, then at least the tape changes tone. Coming up, small cap momentum, perfect timing after this one. All right, let's pull up MIMI. Small cap momentum check, fast one. This is the Hong Kong fit-out name trying to wear the robotics label today. Platform quote is bouncing in the 2.60s to 2.70s. Move is massive, and the volume is the whole story. 41 million shares versus a 3.3 million average, roughly 12.5 times relative volume. Float? Only about 1.38 million. So yeah, here at the markets desk, tiny float plus monster volume means one thing: respect the wicks. Now the chart. Oof, look at that early flush. It opens around 2.64, shoves down toward 2.48, and that was not quiet selling. Volume confirmed it. Then it bases in that 2.48 to 2.52 pocket. That's the first tell. The second tell is the recovery. Later push from roughly 2.59 into 2.81, with multiple bars over 100K shares. That's actual participation, not just one weird print. We already flagged 2.70 earlier and got that push. Now the question is whether this is acceptance above that zone or just a fake-out wick. I don't have a clean VWAP number in the feed, so I'm using the candles. 2.60 to 2.70 is the live battleground. Above 2.81, buyers are pressing the high. Below 2.60, the squeeze starts losing fuel. Below 2.48, the base is gone. Quick catalyst check, because these little runners need a headline, or at least a story traders can latch onto. Fresh press release yesterday. MIT says it's accelerating robotics expansion with Yunji technology for next-gen commercial-grade service robots. That's the hook. Interior design and fit-out company, tiny market cap, now robotics language. That's exactly the kind of narrative small-cap momentum desks react to. But the candles still have to prove it. If the bid only shows up on spike candles and vanishes on pullbacks, that's fragile. The headline got attention. And here's the part nobody wants to hear when the candle is green. Dilution risk. ProTerminal has MIMI showing an active shelf and an active equity line, with total raisable amount listed at 100 million. The market cap on the overview is only about 6.9 million. That does not mean an offering hits this minute. Don't make that leap. But it means overhead supply risk is real when volume explodes. I don't see a halt print in this package, but with a float this small, halt risk is always on the table too. So final scorecard, real breakout only gets cleaner above 2.81 with volume. Lose 2.60 and this gets messy. Lose 2.48 and the morning base fails. Coming up, news and emission is going to hit the broader tape.
Thanks, Markets Desk. Quick macro check right as the 12:30 data hits. Okay, so the headline here is not clean, but the tape is taking it pretty well. Goods trade balance came in way wider, minus 118.8 versus the minus 99 estimate. That is not a small miss. That's the macro equivalent of opening the fridge and realizing somebody finished the milk and left the carton. Claims are a little softer on the 4-week average, 205.5 versus 203 expected. But continuing claims are actually better at 1.778 million versus 1.790 million expected. So labor is bending a bit, not breaking. Then inventories. Retail X autos up 0.7 versus flat. Wholesale inventories up 1.3 versus 0.1. More stuff sitting on shelves. That can cushion growth, or it can become margin pressure if demand slows. And yet, look at the reaction. SPY around 770.9, up 0.63%. QQQ up 1.06%. IWM only up 0.30%. VIX down at 18.21. So the market's saying, messy data, yes. Panic data, no. Here at the macro desk, I'm framing SPY 771.1 as the top of this little post-print box, and 769.4 as the lower edge. Above 771.1, buyers are absorbing the macro mud. Below 769.4, that wobble starts to matter. Now the cross-asset read is where this gets useful. Stocks are green, but bonds are not throwing a parade. Using the bond proxies we've got on the tape, TLT is 83.20, down 0.12%. IES is 93.295, basically flat, but red. So rates are not giving equities a big tailwind here. They're more like, yeah, fine, enjoy your rally, I'm not helping carry the couch. The dollar is a touch softer. UUP 27.995, down 0.09%. And the yen proxy is basically unchanged at 57.54. That matters even if you only trade US stocks, because a calm FX tape keeps the risk machine from overheating. Commodities are not saying growth scare either. Gold is up 0.23% to 422.3. Oil is up 0.97% to 128.58. So this isn't a simple safe haven dump, and it's not a deflation scare. It's more like inflation is still the guest who won't leave, but nobody's calling security yet. Then crypto beta is loud. BITO up 2.65%, coin up 5.53%, MSTR up 12.47%. That's the volatile end of the sandbox. So green doesn't mean tame, but it does tell you risk appetite is alive. My quick risk thermostat line, VIX staying below 18.5, keeps this tape comfortable. If VIX starts reclaiming 18.5, that's when the equity move gets a lot less casual. All right, macro desk is up. The 12:30 data just hit. And yeah, it's messy, but the risk tape is still wearing its green jacket. Goods trade balance came in at negative 118.8 versus the negative 99 estimate, so that deficit is wider than expected. Jobless claims 4-week average, 205.5 versus 203 expected. A little softer there. But continuing claims at 1,778 versus 1,790 expected is actually a touch better. Then inventories. Retail ex-autos up 0.7 versus flat expected. Wholesale inventories up 1.3 versus 0.1 expected. Translation. More inventory, wider trade gap, labor not falling apart. And the market's reaction is the tell. SPY is around 771, up 0.65%. QQQ is 719, up 1.07%. IWM only up 0.30%, and VIX is down 1.75% to 18.21. So the equity market is saying, this is not clean data, but it's not scary enough to knock the AI and mega cap bid off the horse. Watch that SPY 771.07 intraday high band. Above that, the shrug continues. Now here's where the cross-asset stuff matters, even if you only trade US stocks and pretend the bond market is a haunted basement. Bonds are not screaming safety bid here. TLT is 83.23, down 0.08%. IEF is 93.305, basically flat, down 0.02%. So equities are green, but it's not because duration is ripping higher underneath them. The dollar proxy is softer, 27.9947, down 0.09%. Yen proxy is flat at 57.55. And that combination helps explain why QQQ can keep leading. Softer dollar, no major FX accident, volatility lower. But commodities aren't giving you a pure disinflation party either. Gold is 422.28, up 0.23%. Oil is 128.465, up 0.88%. Oil green into a wider trade deficit and inventory build is the macro desk's little raised eyebrow moment. Not panic, just not exactly the inflation has left the chat meme. And then crypto beta is loud. BITO up 2.46%, coin up 5.29%, MSTR up 11.82%. That's risk appetite with a megaphone. Okay, so rotation read here? This is not some clean everybody wins victory lap. QQQ is the leader, up about 1%. SPY is up roughly 0.6, but IWM is only up 0.3, and Brett is still mixed. That matters. That's selective risk on. Big cap growth is carrying the backpack. Small caps are participating, but they're not exactly sprinting out front. And the VIX at 1821, down a bit, that's the risk thermostat cooling. Not ice cold, not panic, just calmer. So for the rest of the afternoon, my radar is pretty simple. SPY needs to actually clear and hold that 771.07 high, instead of just tapping it. VIX around 18 is the line for whether this stays chill or gets twitchy again. Dollar proxy is sitting basically right on 28. Oil's around 128.5, and any Jackson Hole follow-through headline can still move this tape fast. Green tape? Yes, but selective green. All right, keep those levels on the screen because coming up, we're rolling into the news intermission and we'll hit the headlines actually driving the movers. All right, quick pro-terminal news brief. Big picture wires first, because here at the macro desk, we refuse to let one green candle become a religion. Headline: Jackson Hole is kicking off, and 2 Fed officials are warning about persistent inflation risk. What happened is pretty straightforward. The policy crowd is not declaring victory on inflation yet. Why it matters: that keeps rates, the dollar, and long-duration tech in the same argument. QQQ is still around 719, up 1.1%, and VIX is down near 18.22, so the tape is taking it calmly for now. Next headline: Oil prices are rising as investors weigh the lack of progress in Middle East negotiations. The fact set here is geopolitical risk, not a demand boom victory lap. Crude is around 128.47, up about 0.9%. And that matters because energy is the annoying house guest in the inflation story. It shows up, eats the snacks, and suddenly everyone's rent conversation gets louder. For markets, that hits airlines, transports, consumer margins, and inflation expectations. Neutral on the politics, very not neutral for input costs. Next up, U.S. jobless claims dipped while the goods trade deficit widened in July. We already hit the data print a minute ago, so here's the investor version. Labor is still not cracking in a clean way, but the trade math got uglier, with the advanced goods deficit at minus $118.8 billion versus a minus $99 billion estimate. Why it matters? Resilient labor supports the consumer story, but a wider deficit can drag on GDP arithmetic. And the key tell? Equities absorbed it. SPY is still near 771, so buyers haven't treated this like a stop sign. Next headline: the dollar is basically flat after the data, with attention shifting right back to Jackson Hole. Our dollar proxy is sitting around 27.99, down just a hair on the day. Why it matters? When the dollar goes quiet, it gives other risk assets a little oxygen. Gold is firm, and crypto-linked beta is still alive, with coin and MSTR moving sharply. That's not a calm corner of the pool, obviously. But the macro hinge is simple. If the dollar wakes up, the risk party gets a chaperone. Final one for this brief. U.S. authorities are probing Apex Logistics over alleged smuggling involving NVIDIA AI chips. Important distinction here. This is not a fresh NVIDIA demand story. It's an enforcement and supply chain control story. Why investors care? AI semis have become strategic hardware. So export controls, distribution channels, and compliance risk now sit right next to revenue growth in the valuation debate. The AI trade is still bid today, but headlines like this remind you the plumbing matters too. Coming up, quick pro-terminal promo, then we're back to the movers board.
Thanks. Macro Desk, quick pit stop. I want to show you the exact pages we're using here at the markets desk. This is ProTerminal's movers board. Not a buy list, not a hype machine. It's the scanner. CEU up over 138%. PPCB up over 122%.
VNRX up 67%, and the tape's green. QQQ's leading, VIX is lower. So boom, right away we know where the abnormal action is, and then we go verify it. Now I'm pulling sell you straight into the 1-minute terminal chart. This is the whole point. Percent gainer is step 1. The candles tell you if the move is still alive or if it's already getting stuffed. You want volume, wicks, VWAP, high of day behavior, the actual bid offer fight. And yeah, data can be delayed or incomplete sometimes. Halts can happen, feeds can get weird. That's why we don't treat one green row as a trade plan. Then for small caps, this page matters a ton. The dilution center. Oof. This is where a lot of traders skip the homework. Shelves, ATMs, offerings, resale registrations. None of that automatically means a stock has to go lower right now. But it absolutely changes the risk profile. If something is ripping on relative volume, I want to know if there's potential supply sitting behind it. That's research. That's context.
Thanks, Markets Desk. Breaking now. NVIDIA earnings and Jackson Hole are the whole scoreboard. ProTerminal's newsroom has moved this to the top of the brief. Markets are holding steady while traders wait on NVIDIA's upcoming earnings report and Fed remarks out of Jackson Hole. What we know, NVIDIA is still the AI chip bellwether, so that print matters for the whole AI complex, not just NVDA. And Jackson Hole matters because every rate-sensitive corner of the tape is listening for tone. What we don't know yet, the actual NVIDIA numbers, the guide, or the exact policy language. So the market read is simple. QQQ is around 719.9, up 1.2%. SPY is 771.7. VIX is down near 18.20. That's optimism, yeah, but with a helmet on. Very Wall Street. Bike pads over a suit. Next headline, oil falls over 4% on Iran sanctions relief hopes. The desk is seeing crude drop sharply as traders read the latest U.S. sanctions on Iran as less disruptive than feared. Why it matters. Energy is one of the fastest pipes from geopolitics into inflation, shipping costs, margins, and ultimately the bond market's mood. Lower crude pressure can cool some of that inflation anxiety, but here at the macro desk, I'm not pretending energy is suddenly boring. Our live oil read is still around 128.6, basically sitting right on that 128.5 area we flagged earlier. Oil headlines are doing pinball machine stuff today. Third headline, Robinhood shares soar 14%. Hood is jumping after being added to the S&P 500. And that matters because index inclusion can bring passive fund demand, more visibility, and a different shareholder mix. That's the mechanical side of the move. The real follow-through, longer term, still comes back to user growth and profitability trends. Ticker confetti only pays rent for so long. With VIX near 18.2 and risk appetite still alive, this kind of index ad squeeze can get attention fast. Coming up, the desk hands it back into the single name action with OMH on deck.
Thanks, Macro Desk. All right, Markets Desk is back on the movers board. And look at this board. SPY's green. QQQ's up over 1%. VIX is lower. But breadth is still mixed. So these little names are doing their own thing. CELU at the top, up about 134%. Monster relative volume. PPCB right behind it, up 120. BBBYW warrants doubling. Then the ugly side, SMJF down 87%, KXIN down almost 68. Oof, that's a trapdoor board. And quick scorekeeping, Mimi did hit that 2.60 flush we flagged earlier, so I'm not ignoring it, but we're not camping there yet. First chart has to be CELU. CELU on the 1 minute now. This is why the Markets Desk gets loud. $2 and change, up roughly 134%, and the volume is just silly. 158 million shares versus an average under 100,000. Relative volume around 1,600 times. That's not a typo. Float listed around 7.3 million, so the tape has churned that float over and over and over. That can create real squeeze action, but it also means every late bid can get tested fast. I'm staring at $2 as the first character line. If CELU loses 2.00, that's where the momentum crowd can start backing away. On the upside, 2.10 is the near-term line I want to see it reclaim and hold before I call the bid clean again. Also, high dilution risk is on the profile here, so don't turn a fast tape into a love story. This is a chart and volume trade, not a marriage. PPCB next. This one's nasty in a good way and a scary way. We're at 230-ish, up about 120%, 83 million shares traded, and look, this is a biotech with a float listed around 1.25 million. So yeah, the math is exactly why it can move like this. When that many shares hit a tiny float, you get the squeeze candle. Then the question becomes, is it building, or is it just one giant liquidity event that rubs late chasers? Also, dilution risk is flagged high here, so I don't want to romanticize the move. For me, $2 is the big sanity line. If it's above 2, the squeeze is still alive on the chart. If it starts accepting under 2, that's where the rug check conversation gets a lot louder. Now, BBBYW, and quick note, this is the warrant tape, not the common stock read, so you've got to treat the price action differently. It's around 93 cents, up roughly 110%, but only about 580,000 shares traded, and we don't have the same float and relative volume picture here. I'm not going to overread that. Warrants can trade thin, they can gap around, spreads can get weird, and the chart can look amazing right until there's no bid where you thought there was one. So the watch here is air pockets. If it's holding above that 90-cent area and bidding clean, fine, that's momentum. But if it starts slipping under 90 with no bounce, that's when this can turn from runner into where'd the liquidity go really fast. SMJF now, switching over to the loser side, and yeah, this is the other half of a mover's board. Not everything is a rocket ship. This thing is at about 144, down 87% on the day. And the key thing here is the failed bounce behavior. It already made that push into the 150 area earlier, couldn't really build from it, and now we're sitting back underneath that zone. So when I see that, I'm not calling it a comeback just because it stops going straight down for 5 minutes. I want to know, are buyers actually reclaiming levels, or is it just shorts covering, a little liquidity pocket, then sellers reload? 5 million shares traded, about 7 times average volume. Small float around 3 million, so it can snap around. But right now, under that 150 area, the chart still looks like damage control, not clean momentum. KXIN next, and this one's ugly too. Auto retail name Kaishin Auto, down about 68%, trading around 168. Different feel from SMJF though. The volume is elevated, 1.2 million, about 4 times normal. But it's not that insane blowtorch volume we saw on the upside names. And the big thing on KXIN is the dilution risk tag is high. So when you get a dump like this, I'm immediately asking whether the tape is still actively selling or whether it's just trying to base after the flush. If the 1-minute candles are making lower highs under 170, that's still sellers in control. If it starts holding above that 165, 168 pocket and the volume dries up on the dips, then okay, maybe it's basing. But right now, this is not a pretty chart. It's a damaged small cap tape, and the first job is just figuring out whether the pressure is done or only taking a breather. VNRX now, Volition RX, sub-dollar healthcare runner, and this is the one where you've got to separate real volume from penny stock nonsense. It's around 53 cents, up about 58%, but the volume is the headline. 303 million shares, roughly 140 times relative volume. So yeah, the tape is absolutely confirming attention here. Tiny float too, around 6.6 million, so when liquidity piles in, these candles can get violent fast. But same sentence, this is a 50-cent penny stock. Dilution risk is marked high, and those can rug just as fast as they rip. For me, the clean read is simple. Watch the 50-cent area. Above that, buyers are still defending the breakout zone. Lose that, and you can see how quickly the air comes out. Now, quick scoreboard on the product movers. OKTG, PUR, CRMG, these are leveraged ETF products, not normal operating company breakouts. OKTG is a 2 times OKTA daily product, up 57%. PUR is a 2 times PURR product, up 42. CRMG is 2 times CRM daily exposure, up 41 with big volume. Different animal, daily reset, amplified move, product mechanics. Don't read those like CELU or PPCB. And MIMI, quick status check before we move on. Still hanging around 257, up 43%, 42 million shares, tiny float, and it does have recent filings flagged, so that stays on the radar. Alright, movers board is still wild, but we're going to shift gears from the small cap heat into the next live beat now. Alright, quick deep dive on OMH, and right away heads up. This is a 7 to 8 cent stock, so the risk is nasty. Anything under 10 cents can get delisted at any moment. And yeah, this is not something I'd recommend for day trading. We're studying the tape here, not cheering it. OMH is around 7.75 cents, down about 18%, while SPY and QQQ are green. That relative weakness matters. Green market, red microcap. That's not strength. Okay, look at the actual 1-minute structure. Early pop, real volume behind it, opened around 0.0788, pushed into that 0.0815 to 0.0818 zone, and the volume was there. You had those bigger minute bars, roughly 120, 130, 145,000 shares. So the first move wasn't totally fake. But then, oof, look at that fade. Lower highs, lower lows, right back into the lows. And remember, here at the markets desk, we flagged the 7.8 cent break earlier. That hit. Now the live line is basically 0.0775. If it loses 0.0775 clean, that's day low failure. If it somehow reclaims 0.0818, that's the spot where the failed pop at least gets questioned. Until then, this is a round trip chart trying to base, not a confirmed reversal.
Thanks, Markets Desk. Quick paper book check here at the Stock Whisperer. I just opened MRVL in the simulated broadcast portfolio. 40 shares long, average 244.195, and it's basically flat right now. So no victory lap, no damage either. The setup is pretty clean. High impact Google stake option catalyst. Tech tape is still supportive, with QQQ up about 1.2%, and I'd rather take a defined risk shot in a real liquid tech name than chase the sketchier small cap stuff that's been flying around. Bracket is on. Take profit sell limit up at 260.50, stop loss down at 236.80. The early warning line for me is 238.50. If MRVL loses that, the news reaction is starting to fail before the actual stop gets tested. Rest of the simulated book. CRM long is flat at entry, so that one's still just waiting for a decision. HSBC short is working a little, up about $30. XOM short is the best open mark right now, up about 187, but it's close enough to the 157.80 stop that I'm not treating it like free money. WEN short is slightly red, down $12, still inside the bracket. ZM short is the problem child on the sheet, down about 75, and I've only got the 90.50 cover bid showing in working orders, so that's one I'm watching tighter. Cash is still about 85.4K, so the book is not maxed out. And on the watch list, NVDA stays simple. Above 230 is clean continuation. Below 223 is failed catalyst warning. Coming up, Mega Cap Watch should tie nicely into this tech tape.
Thanks. Stock Whisperer, Markets Desk grabbing Mimi for a quick candle lab. Alright, this is still sitting on the movers board type of move, up about 45%, price around 2.62, while the broader tape is green, but not crazy. QQQ leading, SPY firm, breadth mixed. So yeah, relative strength is there. But oof, look at the shape. Big early push and a real fade. This is not a straight line squeeze anymore. Here's the read. MIMI opened around 2.595, pushed clean through the early range, and ran up toward that 2.79 area. Day high is around 2.81. That first leg actually had confirmation. We're not talking about one random candle on no volume. The tape had those big 1-minute volume bursts, especially through the 2.72 to 2.79 zone, over 130,000 shares in a minute on the spike. That's the good part. Then the chart starts changing character. Lower highs, 2.73, 2.75, can't get back to the high, and then it starts bleeding down into the low 2.50s. We flagged that 2.60 area earlier, and yep, it did cross below it, so score that as a warning hit, not a victory lap. The market told you the breakout lost momentum. Right now, this is basing, not ripping. Latest candles are trying to stabilize around 2.57 to 2.62, and the key line underneath is 2.53 to 2.55. If Mimi starts accepting below 2.53, that base is failing and the fade is still in control. Above, the real reclaim zone is 2.75 to 2.79. That's where supply showed up after the first squeeze. So for the Markets Desk scoreboard, watch below 2.53 for base failure, watch above 2.79 for a real high area reclaim. Until then, it's chop in the middle. Coming up, we've got mega cap watch, so we'll flip from this small cap volatility into one of the big leaders next. All right, let's pull up Apple, because this is the mega cap tape check right here. Daily chart first. APL is green, but only about 0.5%. So with QQQ up around 1.2, Apple is not the leader today. It's participating, not driving. Bigger picture though, this chart's still above the key moving averages, and you can see the recovery structure after that nasty volatility pocket. The daily map is pretty clean. 300 is the big shelf underneath. 315 is the fight right here. Oof, it's sitting basically on the door handle. Here's the thing with this daily. It had the bigger run-up into the mid-340s, then the sharp air pocket, then the rebound back over 300. That matters. Buyers defended the round number, but this last little cluster in the 310 to 315 zone is not explosive. It's more pause than power. Lower volume on the recent candles, neutralish momentum, weak trend strength. So here at the Markets Desk, I don't want to pretend this is the same as a clean breakout leader. For Apple, I'm marking 315 as the daily pressure spot. Above that, it starts looking like buyers are actually accepting higher prices. Below 300, totally different conversation. Now let's drop down to the 1 minute, because this is where you see the actual tape. And yeah, tight, very tight. AAPL has basically been boxed between 314.15 and 315.18, and it's sitting near 315 right now. The important part, there was volume near 314.76, then another push around 315.14, but neither one really launched. That tells you sellers are meeting it up here, not crushing it, just capping it. So the intraday level is 315.18 above. That's the range high. If it clears that with real volume, okay, now Apple is trying to join the QQQ move. If it slips under 314.30, that little base starts to wobble. Quick catalyst check on Apple too, because the chart's not happening in a vacuum. The recent company news has the M6 and M5 Ultra announcement, with Apple leaning hard into performance and AI compute. And the last earnings print showed third quarter revenue at $109.4 billion, up 16% year over year, with EPS at 2.02, up 29%. So the fundamental backdrop is not the issue. The question today is tape leadership. Right now, Apple is clean, but not aggressive. I'm keeping 315.18 above and 314.30 below on the intraday scorecard. Coming up, we've got the news intermission, so we'll tie this mega cap tape back into the headlines.
Thanks, Markets Desk. Quick wire lap from the macro desk. Top story. Marvell is giving Google an option to invest up to $12.2 billion in a joint chip venture focused on custom AI chips. That's the headline. And the market read-through is pretty simple. The AI trade keeps moving from big speeches into actual supply chain commitments. With QQQ sitting around 719.9, up 1.2%, this is exactly the kind of story tech bulls want to see. Not just hype, actual silicon plumbing. Still, options aren't executed revenue yet. That's the grown-up sentence nobody likes, but we have to say it. Next one. The U.S. Treasury is doubling the size of some debt buyback operations to at least $4 billion. Not glamorous, I know. Bond market plumbing is where excitement goes to wear a cardigan. But this matters. The goal here is liquidity support in long-dated bonds, and when the long end behaves, equities usually breathe a little easier. We've got TLT around 83.19, basically not doing fireworks, and IEF near 93.29. After the goods trade deficit printed wider at minus 118.8 billion versus minus 99 expected, the Treasury market is still the steering wheel for the whole tape.
All right, top of the hour. Quick market minute reset from the macro desk. It's 1:02 p.m. Eastern, and the tape is risk on.
but not exactly a parade with confetti. SPY's sitting around 772, up about 0.8%. QQQ is the leader, 720-ish, up 1.2%. So yeah, growth and megacap tech are still wearing the crown. IWM's green too, but only up about 0.4%. So small caps are invited to the party, they're just standing near the snacks. VIX is down to 18.21, off almost 2%, and that matters. The market's risk thermostat is cooling, even with breadth still mixed. So the story isn't everything is ripping. The story is index buyers are leaning into the big liquid stuff, while the under-the-hood tape is a little more selective. The driver today is that macro stack. Jackson Hole still hanging over the tape, plus the 1230 data dump. Goods trade balance came in wider than expected, minus 118.8 billion versus minus 99 expected. Inventories were hotter too. Wholesale inventories up 1.3% against a 0.1 estimate. Claims were close enough to not blow the doors off. 4-week average 205.5 versus 203 expected. Continuing claims 1.778 million versus 1.79 expected. Cross-asset read, bonds are a little soft. TLT down 0.17%, IEF down 0.06%. So rates aren't exactly giving equities a free lunch. Dollars basically flat lower at 28. Yen proxy 57.54 and quiet. Gold still bid at 423. Oil's up near 128.61 and crypto risk is loud. BITO up 2.5%, coin up 5.9%, NSTR up almost 12%. So here's what I'm watching. QQQ holding that 720 area. VIX around 18 into 18.5. Oil staying above 128.5 and whether the dollar loses that 28 line. Coming up, we've got a quick pro terminal tour, then back to the movers board, and later the options vol beat gets to decide whether this calm VIX is real or just wearing a fake mustache. Breaking right now, Pro Terminal's newsroom is tracking NVIDIA surging after blockbuster Q2 earnings. Here's what we know. NVIDIA beat Wall Street expectations. The outlook came in optimistic, and the demand story is still AI infrastructure. That's the clean part. What we don't know yet, at least from the first pass here, is the full quality of the guide. Margin detail, segment mix, supply chain commentary, and whether the call adds anything that changes the first reaction. Market read? QQQ is sitting around 720, up about 1.25%. SPY around 772, up 0.78%. VIX lower near 18.23. So the tape is not treating this like one lonely megacap party. It's risk-on tech leadership with NVIDIA as the drum major. And yeah, at the macro desk, we do notice when the entire parade starts following one chip stock. Next headline. Salesforce, CrowdStrike, and Okta are rallying as AI helps lift Q2 results. Different corner of the market, same theme. The AI trade is not just chips and server racks anymore. It's leaking into software, cybersecurity, workflow, all the less glamorous plumbing that actually makes the enterprise machine run. Why it matters? If the bid is broadening from NVIDIA into CRM, CRWD, and Okta, that tells you investors are paying for AI revenue pull-through, not just AI hardware scarcity. The risk is still execution. Software names have to prove AI features turn into durable spending, not just prettier slide decks with a robot icon in the corner. And the cross-asset story. Oil prices are higher as unresolved Middle East talks keep supply risk premium in the market. The oil proxy on our board is around 128.61, up just under 1%. So it's not a panic candle, but it is enough to matter when tech is ripping and rates are already a sensitivity point. Why investors care? Higher energy feeds into margins, transport costs, inflation expectations, and it can push money toward the XOM and CVX side of the board, even while growth tech leads. So today's tape has a funny split personality. NVIDIA is handing out risk appetite. Oil is quietly asking who's paying the fuel bill. Coming up, we'll flip back to the market mover scan and see where the actual volume is landing.
Thanks, Macro Desk. Quick tool pit stop before we go right back to the heat map. This right here is the movers board inside ProTerminal. BBBYW, CELU, PPCB. Big green on the day, and CELUs showing that wild relative volume print. The key is, this board is a starting line. It's not a buy button. It tells the markets desk where the action is. Then we go verify it. Now this is the part a lot of traders skip. And oof, that can get expensive fast. Dilution center, shelves, ATMs, offerings, registered directs, all the stuff that can change the risk profile on a runner. If a small cap is up 100% and there's fresh supply risk sitting there, I want to know that before I start reading every green candle like it's clean momentum. Risk and uncertainty are real, especially in these tiny names. Let's use CELU as the example because it's live on the board. Up around 130%, price near $2, and relative volume over 1,700 times. That's not normal tape. So before the chart read, I'm checking the company page. Filings first. What did they file? When did they file it? Any financing language? Any share count stuff? Then insider trades. Not because one print tells the whole story, but because I want the context in one place instead of chasing tabs all over the internet. And then we hit the chart. 1 minute terminal view. Candles, volume, where the bid actually showed up, where the wick got smacked, whether this is holding momentum or just fading after the headline pop. That's the workflow. Movers, risk checks, filings, insider context, then the tape. Everything we're using on the show is ProTerminal. If you want the same setup, it's at proterminal.io. Coming up, we go right back into the market movers scan.
All right, movers board. Markets desk is going fast because this board is wild right now. QQQ is still green, VIX is softer, but breadth is mixed. So don't confuse the index tape with these single name explosions. Top of the board, CELU up about 135%. Oof. 165 million shares traded against a normal day under 100,000. That's not a typo. That's a full volume event. Right under it, PPCB up about 120%. Biotech again, tiny float, huge relative volume. Then BBBYW, warrants, up over 100%, and that one needs a totally different lens because warrants can move nasty. On the red side, SMJF and KXIN are absolute trapdoor charts today. We're going chart by chart now. No static board read. I want the 1 minute tape. First chart up, CELU. This is Cellularity, Healthcare Biotech, trading around 207, up 135%. And look, with a 7.3 million share float and 165 million shares already traded, this is float rotation stuff. The stock has changed hands over and over today. That can create real momentum, but it also means the rug pull risk is not theoretical. High dilution risk is on the data too, so I'm treating this as a tactical tape read, not a clean investment story. The line I care about right now is $2. Simple. Above 2, buyers are still defending the move and dips can keep getting bought. If CELU loses 2 with speed, that's where these biotech squeeze charts can go from exciting to ugly fast. I don't have a clean VWAP number in the data package, so I'm not going to fake it. I'm using the live 1 minute chart and the board stats here. But the scoreboard level is clear. $2 is the first tell. Next one is PPCB, and this is the classic tiny float biotech heater. Propant Biopharma, around 235, up basically 120%, and the float on the board is only about 1.25 million shares. So yeah, when 85 million shares trade through a name like that, the chart can get ridiculous fast. The key for me on this 1 minute isn't just the percent move, it's whether the current tape keeps accepting around this 235 area. If it loses that zone and can't reclaim, that's where these low float biotech moves can turn into air pockets. But if it reclaims 235 and volume stays thick, then you've still got momentum traders defending the move. Just remember, high dilution risk is on the board here too. So this is not a clean, sleepy biotech. This is a fast tape name. Now, flip to BBBYW. And big difference here. This is the warrant line, not the common stock. That matters a ton. It's trading around 92 cents, up over 100%. But warrants can move totally differently from the equity because you've got conversion mechanics, Expiration, liquidity, spreads, all that stuff baked in. So I would not look at a 109% move here and treat it like a normal common stock breakout. On the 1 minute, the clean read is really simple. 90 cents is the current tape area, and $1 is the obvious psychological magnet above. If it's chopping under a buck with thin prints, that's very different from a common stock holding a breakout. Warrants can be nasty both ways, so respect the volatility on this one. Now hit SMJF on the loser side because this is the ugly part of the board. SMJ International, construction name, around 158, down 86%. That is not a normal red candle, that's a wipeout. Volume's almost 6 million versus average in the 700,000 area. So yeah, people are active here. But on a chart like this, I'm not chasing every green 1 minute candle like it's suddenly fixed. The read is simple. Do sellers keep smashing lower highs, or can it actually build above that 160 area and stop bleeding? If it can't reclaim and hold 160, failed bounce risk stays front and center. Same idea on KXIN, just a little less nuclear but still nasty. Kaishan Auto about 162, down 69%. And remember, we flagged that 170 area earlier. It got hit, but this is why follow-through matters. A level getting touched is one thing. Holding above it, building candles and forcing shorts to cover is another thing entirely. Right now, if KXIN keeps living under 170, I'd still call that red side continuation pressure. If it reclaims 170 and actually holds it, then okay, the bounce attempt gets more believable. But under it, sellers are still the ones steering the tape. One more gainer we've got to hit before we clean this board up. VNRX, VolitionRx, healthcare diagnostics name, trading around 54 cents, up about 58%. And look at the volume, 309 million shares. That's not a typo. Relative volume's around 143 times normal. Float listed around 6.5 million, so yeah, this is exactly the kind of sub-dollar tape that can move way faster than people think. The line for me is super simple, the $0.50 area. Above 50 cents, buyers are still trying to keep control of the story. If this loses 50 cleanly, that's where the character changes and it can turn from momentum into bag holder chop real quick. Also, dilution risk is marked high here, so don't romanticize it. Just respect the tape and the level. Quick, cleanup rotation now. OKTG first. And don't treat this like a normal company chart. This is a 2x long OKTA daily ETF, up 56%, on about 194,000 shares. Cool move, but leveraged ETF mechanics are a different animal. So I'm reading that as a wrapper move, not a clean small cap breakout. MIMI's more of the classic runner profile. 267, up 48%, 42 million shares, tiny float. That one still has cleaner momentum if it's holding higher lows and not just knifing under VWAP. Chow, around 54 cents, up 42%. Decent volume, but more sub-dollar chop, so I'd want to see buyers keep defending the base instead of just chasing candles. And PUR, same warning as OKTG, another leveraged product up 41%. But the chart can look great, while the structure underneath is not the same as trading a regular stock. Alright, that's the movers board. Wild mix of biotech squeezes, warrants, leveraged wrappers, and a few absolute rug pulls. Let's reset and jump to the next story.
Thanks, Markets Desk. Quick vol check, because the options tape is basically the market's smoke alarm. And right now, it's beeping politely, not screaming. VIX is sitting around 18.24, down about 1.6%, while QQQ is holding above that 720 level we flagged earlier. That combo matters. Growth is bid, vol is offered, but breadth is still mixed. So this isn't some everything Ritz everywhere party. It's more selective. Mega cap tech gets the velvet rope. A lot of the rest of the market is still waiting outside. Here at the macro desk, the line is simple. VIX above 18.50 starts to mess with the calm tape. Under that, dips and volatility are telling you the market is still willing to absorb headline risk. Now pull up NVIDIA. Because if you want to understand single name volatility today, this is the elephant wearing a data center badge. NVDA is up about 9.6%, trading near 229.8, and the 1 minute chart is pretty clean. Higher highs, higher lows, volume confirmation through the 226.50 area, then another push around 229.20. The current little battle is right near the highs. Support showing around 229.50, resistance basically that 229.88 day high zone. For options, folks, and again, we're not doing strikes or trade recipes here. The read is this. Realized move is already big, but the stock is still holding tight near the top instead of immediately giving back the earnings gap. If 229.50 breaks, that tells you the post-earnings chase is cooling a bit. If it can actually clear 229.88 and hold, volatility sellers may stay comfortable for now, because price is confirming the move instead of rejecting it.
Thanks, Macro Desk. All right, Markets Desk is back on CELU, because this thing is still the small cap chart everybody's staring at. We've got a $2 biotech trading around 2.03, up roughly 137% on the day, while the tape is green, but not crazy. QQQ's up about 1.3%, SPY's up not even 1%. So this is not just beta. This is its own little momentum beast. Tiny float, monster volume. And yeah, that means it can move both ways fast. Woof, look at that structure. This is why we keep score. CELU opens around 1.98, pops early, then gets smoked down into 1.82. That was not a cute little dip. That was a real washout, and the volume confirmed it. Then buyers step back in, grind it through $2, and the big line is 2.05. That was the early resistance. Once it reclaimed 2.05, it ran all the way into 2.17 for the day high. Right now it's stalling just above 2.03. So the question is simple. Is this building a higher low shelf, or is this the backside starting? I'm not going to invent a VWAP number if I don't have the exact print, but visually, the tape is acting like the reclaim zone matters. Watch 2.05 above for acceptance, watch 2.17 above for the high of day test, and if it starts losing 1.97 to $2 with speed, that's where this gets messy again. Now, catalyst check. Because with these runners, you've got to separate chart heat from actual news. Freshest press release here is the NASDAQ listing compliance update from August 25th. So just be clear, this is not trading off some clean pivotal late-stage drug win today. It's a clinical stage cell therapy name, and the tape is doing tape things. Now flip to the risk page, and this is the part traders ignore when they get mesmerized by green candles. Dilution risk is marked high. Active shelves, equity line, pending S1, 48 total offerings, and about 132.9 million raised over the last 12 months. That doesn't mean the chart can't rip. It means the overhead supply risk is real, and in a small cap biotech, you do not marry the move. Back to the 1 minute. Here's the Markets Desk read. CEU is still alive above that $2 area we flagged earlier, but it's not clean enough to chase blindly. Above 2.05, buyers are trying to keep control. Above 2.17, you've got a clean high of day trigger on the screen. Below 1.97, I'm treating it like the breakout is getting tired. And remember, no halt data in the feed, but with this type of speed and volume, halt risk is always on the table. Coming up, we've got that AIXI deep dive. Different setup, same rule. Levels first, story second. All right. Let's pull up AIXI real quick, because this is a nasty little tape. We're on the 1 minute, and yeah, oof. Market's green. QQQ's up over 1%, and this thing is down about 26%. Price is around 57 cents. Market cap under 400 grand. Float under 500,000 shares. And volume's already over 4.7 million versus a 246,000 average. So the float's turning over, but it's not bullish turnover right now. Look at the structure here. Early range was basically 58.5 to 59 cents, and then sellers just leaned on it. The breakdown starts from around 0.5915. Volume pops, and then the real damage is that flush through 57 cents into the mid-56s. Day high was 0.5943, low was about 0.565. The bounce attempt into 0.577, weak. Volume faded almost immediately. So here at the Markets Desk, the two levels are simple. Below 0.57, the breakdown still owns the tape. Above 0.59, then maybe you can say buyers are at least trying to reclaim the prior range. Until then, lower highs, lower lows, no clean reversal candle yet. Now, Catalyst check. On the News tab, I'm not seeing a fresh same-day press release driving this. The recent company headlines are older. June update on the patent litigation against Apple, where they said they intended to appeal, and then the May ADS ratio change headlines. Flip to filings and there is a 6K from yesterday, so that's worth knowing. But this does not look like a clean, fresh news momentum runner from the press release feed. It looks more like microcap liquidity, tiny float mechanics, and sellers controlling the intraday chart. And this is why the risk page matters on names like this. Dilution risk is marked high. 3 active shelves, active equity line, about 9 million raised over the last 12 months, and the platform shows a total raisable amount north of 180 million against a tiny current market cap. That is a giant overhead supply cloud. So the level score is clean. 0.57 is the breakdown line, 0.59 is the first reclaim that matters. Cheap price alone is not the setup. Coming up, Mega Cap Watch. Totally different tape, bigger liquidity, cleaner levels. Alright, let's get off the tiny float chaos for a second and pull up MSFT daily chart first. This is the mega cap version of a momentum check. QQQ's still leading around 720. VIX is lower. Breadth is mixed. So if Microsoft's up about 1.5% in that tape, yeah, that matters. Big stock.
Thanks, Markets Desk. Breaking news brief here from the macro desk. ProTerminal's newsroom is tracking a tech rally after NVIDIA's most recent earnings beat expectations and guidance came in bullish. What we know? The headline read is that AI demand still looks strong, and that's giving investors a reason to keep paying up for the growth trade. What we don't know yet? How much of that good news was already baked into positioning and valuation once the first reaction cools off. Market read right now. QQQ around 720.5, up 1.28%. SPY around 772.2, and VIX we are 18.23. So the tape is treating this like confirmation, not a fire drill. Next headline. NVIDIA earnings were also tied to a potential $280 billion swing in equity derivatives. That's not a forecast from us. That's the size of the positioning risk the desk is seeing around the event. Why it matters? When one stock is this heavy in the index, options hedging can shove the underlying around and then bleed into semis, megacap tech, and the QQQ complex. Basically, the tail can wag the dog, and today the dog is wearing an AI collar. No strikes, no options playbook here. Just the market structure point. Volatility around NVIDIA matters beyond NVIDIA. Third headline. ProTerminal is tracking reports that NVIDIA could buy Hugging Face for $12.9 billion. Important wording there, reportedly. We don't have final deal mechanics in this brief, so don't treat it like a closed transaction. Why it matters? This would push the NVIDIA story even deeper into the AI software ecosystem, not just chips and data center hardware. That's the bigger macro angle. The AI trade is trying to become a whole supply chain, from silicon to software rails. Coming up, we'll do a quick ProTerminal pass so you can see where these wires, charts, filings, and risk checks live on the platform.
All right, quick ProTerminal pit stop. This is the exact board the markets desk is using to find the action live. Movers first. Not buy buttons, not hype buttons, research starting points. You've got the gainers, losers, relative volume, price, the whole tape context. Markets risk on today. QQQ up over 1%. So when a small cap is still doing something wild, I want to see it here first. Then I want to verify it. Then, this is the page I care about before I get too excited. Dilution center, especially with these small cap runners. If there's a shelf, an ATM, an offering history, whatever it is, I want that risk on the screen before I start talking like the chart is clean. Momentum can be real and the risk can still be ugly. Both things can be true. That's why we check it. Next stop is the stock profile. We'll use CELU just as the workflow example because it's been on our screen today. Filings tab first. That's where you catch the real paper trail. Then insider activity. And yeah, sometimes there's nothing dramatic in a tab. Sometimes the data can be delayed or thin, but the point is speed. Chart pops, you check filings, you check insiders, you check news, then you decide what the story actually is. Way better than chasing a headline blind. And then we're right back to the 1-minute terminal chart. Candles, wicks, volume, VWAP style tape read, all in one place. That's the loop. Movers board, risk checks, filings, then chart execution context. Educational only, obviously. It's a research terminal, not a magic trade button. If you want the same setup we're using on the show, it's ProTerminal. Sign up at proterminal.io. Coming up, we're jumping right back into the market mover scam. All right, quick pit stop. Everything we're using on this desk is ProTerminal. And this is the stuff that actually keeps you out of trouble. First screen, right here. Dilution Center. This is where I want traders checking shelf risk. ATMs, offerings, all the supply stuff that can smack a small cap runner out of nowhere. It's research. It's context. It's not a magic buy button. But oof, it matters when these tiny names start flying. Then we flip straight to the movers board. This is the heartbeat of the show. Top gainers, top losers, relative volume, price, the quick read. What's actually moving against the tape? SPY's green, QQQ strong, breadth is mixed. So I'm not hunting random stories. I'm hunting relative action. CEU up huge, PPCB right behind it, SMJF getting wrecked. That's the board giving you the map before you ever touch the chart. And when a name is moving, I don't want just the headline. I want the paper trail. So here's the stock profile. Filings first. This is where you're checking for the stuff traders miss. Recent registrations, amendments, financing language, anything that changes the risk profile. Then you can bounce over to insider activity too. Same idea. Not a signal by itself, just another piece of the puzzle. The markets desk is always asking, is the move clean or is there supply hiding behind it? And then, boom, we're back on the 1-minute chart. This is where the tape tells the truth. Volume bursts, failed pops, VWAP fights, reclaim attempts, all of it. That's the workflow. Movers board for the idea, filings and dilution for risk, chart for execution context. If you want the same setup we're using live, it's ProTerminal. Sign up at proterminal.io. Coming up, we're going right back to the movers board.
All right, markets desk is parking it there. QQQ stayed firm, SPY stayed green, breadth was mixed, and the scorecard had hits. AIXI below 57 cents, KXIN through 170. Keep those levels honest. Appreciate you hanging with